Hey, can you hear me? Let me know. Yes, there is some problem with the internet. There was some problem actually. So if you can hear me, if everything is okay, let me know. And yeah, so that's all. We'll wait 1 or 2 minutes more to let the others join. In the meantime, please let me know that if you can hear me or everything is okay. Here is the risk disclaimer. So everything I'm gonna do here, it's only for study purpose, educational based. Okay, so no trade or anything. Let me know that if you can hear. Video is good to loud and clear, brother. Okay, thank you guys. Thanks for joining. So as I told, we'll go with the weekly recap. Okay, this is the weekly candle, so I will try to explain everything according to this weekly candle. Just wait 1 or 2 more minutes because my previous stream I just closed it unfortunately. So maybe someone wants to join. I will just wait little 1 or 2 more minutes. In the meantime, how are you all? I know it's weekend. I shouldn't disturb you, but I am a chart addicted. To be honest, I'm a chart addicted. I was thinking that I'm not going to disturb you today, but that let's go for some more times and for sometimes and let's just gossip, okay? There will be no people here who is actually waiting for trade setup because market is closed. That's why, okay? Come here. I was watching the Bitcoin market today. Actually, okay, upgrade offer upgrade. To make the math, we have got an offer 1 month to upgrade features for $1. What's that? I'll see that later. I was watching the Bitcoin market actually, so I'm thinking that market is going to fall. The Bitcoin is going to fall very soon, and this this will be its target. Or right now, here you can see this thing. This is the very clean sell side liquidity. So that will be my target. So market should fall. Okay. At the same time, I can see this is a very nice shallow run over here. So after coming here to that fair value gap, then market can go one more time above to clear all the shallow run, then it can fall. So I was just watching, okay, randomly. I never trade the Bitcoin or crypto, but I was just watching because it's the closed market. So I was just watching like that way. And all of this lower run, I was thinking, okay, market is actually falling. Trade any of this daily fair value gap, then it will go higher one more time, then it will actually fall. So we are ready, brother. Thank you, Ryan. All we do is wait patiently. Okay, how did you do this week with trading? What did you ask? Miami. Okay. Miami, actually, I will do the weekly analysis tomorrow. The next week, okay. The coming week analysis, I will do it tomorrow. New York local time at 9 a.m. Not today, okay. So it's gonna be very random uh, stream according to our weekly last week analysis. I will just see what I have done wrong last week and what I should have done last week. So that's the theme for today's streaming. I can hear you and see your screen. Thank you, Glenn. Ryan, loud and clear. Thank you, brother. All is okay. Thank you, Mustafa. Learning is fun, brother. I'm enjoying trading, especially during this time. Okay, I guess you just give me a nice compliment, Ryan. Thanks for that compliment, brother. Elena, ja ja ja. Okay, we are also addicted. Okay, ja means yes. So far I know that ja means yes. Am I right or not? Then what's going on? Nothing, nothing special, brother. Is it possible to trade Bitcoin with a funded account during weekend? If you trade through FTMO or my forex, actually I was used to trade with my forex fund, which is actually banned. It's no more. But FTMO, they allow you to trade Bitcoin during the weekend. I don't know about right now they allow it or not, but previously we were allowed to trade FTMO, sorry, Bitcoin through the weekend by FTMO. I used to trade crypto. It is highly manipulated in my opinion. I never trade crypto, Ryan. Hello, I have also joined. Welcome, brother. Welcome, Silas. Nah, I didn't do good this week. We'll stay focused for next week. That's the inspiration, brother. That's the motivation. Mo- Motivation. Go for last 2 weeks price action. I will go only the last week, brother. Not 2 weeks. Just this week. Unless 30-year bond JB for me at the end when you are done, you have time. 30-year bond? I never did that. It's a very unknown 30-year bond. What is the symbol for 30-year bond? I don't know. Okay, so here this is the chart for NQ, and you can see this is the whole week. So I will stay here to 15-minute chart. So this week I'm gonna mark it from Monday, sorry, Sunday. So where is Sunday? Tuesday, Wednesday, Thursday, Tuesday, Wednesday, Thursday, Sunday. Where is Sunday here? Friday, Sunday. So from here, this week started from here. So I'm gonna start from there. JB. I'll just remind me later, okay? In 106. Thank you, brother. Just let me remember that later when I'm done with NQ this week price action. Then please remind me that JB. I will see. I never saw that before, so I will see about that. So first, I would love to come here to my Twitter actually to show you something, guys. I always talk about 15-minute chart, and I really get upset when you guys continuously refer me to 5-minute chart or hourly 4-hour chart or something. I have just pinned a tweet to my Twitter. You can see if you are with me or you want to be with me, must watch this video. I always talk about 15-minute chart. So this video is uploaded by a guy. I don't know him, but it was in front of me to my YouTube homepage. I saw this and I just put the link over here. I believe that it's gonna help you to understand why I always give the priority to 15-minute chat. Okay, ICT, this is ICT's video. Whatever is in this video, ICT talked about that. So no, it is not like someone's opinion. This is ICT's opinion. So please don't skip this video, this kind of 14 minutes video or something. Watch this video, okay? And then if you want to subscribe to his channel, the guy who uploaded this video, you can do that as well. I didn't, but you can do it. So over here, this is this week. So I will be here without any dollar index, without any immunity chart, any other time frame. Okay, this is my 15-minute chart in a short way. Here is the new week opening gap. I just kept it to my chart. This is the hourly fair value gap, and there is the 15-minute fair value gap. I explained yesterday. Price actually came to the 15-minute fair value gap, so I'm gonna mark the 15-minute fair value gap as well. Price was kind of bullshit over there from 15-minute chart. That's why I didn't focus on 50-minute chart. Instead of that, I went to hourly chart. But yeah, I need to mark it because market actually came to this 50-minute level gap. So this is the 15-minute last level gap. I'm gonna mark it as a last level gap from 15-minute chart, and I'm gonna remove it from my chart. I'll just keep it over here. Okay, the last level gap. Yeah. Followed you on X. Thank you, brother, for following me over there, Neil Jadhav. Thanks, man. So price came here to 50-minute last fair value gap, and it went higher, lower. All of this price action, I'll go one by one. Now here, the Monday price action was kind of unfair price action. So I'm gonna skip this Monday. The reason is this is unfair price action. You are not going to see this type of huge move around Monday. Okay, I really don't see this type of move around Monday. But yeah, it is what it is. So why don't price go deeper into discount or for our fair cap consequent encouragement? Okay, 100 tricks, 100 ticks. You are new, brother. So please give me more time. I mean, stay here some more time. Otherwise, it's gonna be very difficult for me, for you as well, to explain something. I don't go to 4 hour chart. I don't go the discount. I don't go for optimal trade. I don't go for anything else. Okay, something like that. So what I go, I will explain only that. This is the high, which was the target. This is the extreme buy side liquidity from 50 meters. So I am here, right? This Monday. I would love to mark the only Monday. So here until 4. This is you are going to do every week. After ending the week, you are going to do this. When you are done a week, you will do this. First, I'm going to mark the high. This is the all-time high. I'm just seeing from this small chart. So from this small chart, you can see this is the all-time high. So all-time high is always your buy side liquidity. It is always your buy side liquidity. You don't need relatively equal highs or anything. This is your all-time high. Do you see anything else over here which is important? You can see this is the last parallel gap from 15-minute chart. You are going to mark that 15-minute last parallel gap from your chart. Over here, I'm gonna mark it with the blue line. How you are going to observe the price action after ending a week? What you are going to do around the weekend? So here, this is all-time high. This is the last parallel gap. I just marked these two levels. So I'm gonna come here. I'm just expanding my chart where price came to the last parallel gap. When Friday came to the 50-minute last parallel gap, I explained again why I didn't mark that 50-minute parallel gap. That's my mistake. I should have paid more attention over there. When I saw market failed to reach over there to hourly parallel gap, I thought market is going lower. That was my mistake. I admit my mistake. That was my mistake because I didn't pay my attention to 15-minute chart. Okay, I give the priority to hourly chart. Whoever is with me for so long, they know that I actually give most priority to 15-minute chart, not hourly chart. If I don't see anything from 15-minute chart, then I go hourly chart. But there was the last parabolic from 15-minute chart because of the contract change. I didn't pay attention to the 15-minute chart. You see the just the price action. Look at the price action over here. Okay, it's not clear, so I didn't give the pay. I didn't give the attention over there. That's my mistake. I did that wrong this week. If I wasn't wrong about that, it would be much more better week for me. If I just saw that market came here to that last parallel gap, just this information actually made me disaster this week. Okay, so over here, this is the Monday, and you can see this high and that high. They are relatively equal highs. I'm talking about this high and that high. They are relatively equal highs. At the same time, this high, and that high, they are also the relatively equal highs. Okay, so here I'm gonna mark that as my relatively equal highs. This is my buy side liquidity. This price action is fully unfair. This is Monday. Okay, from this blue line to that blue line, this is unfair price action. But still, as we got it, we will go through that. Remember, this is that 15-minute last parallel gap. This is the all-time high. Here, this is the all-time high. Now, in a short period of time, you can see this is all relatively equal highs, and that is my buy side liquidity. Where did price came? To last parallel gap from 15-minute chart. Your what to say? I mean, Sunday opened here. Where the Monday open? Monday open around 2 3 here. So here, this is the London session. So Monday opened from there. Okay, so we will go from London session. Market where did came? Last parallel gap. This is the new week opening gap. Price came here, went higher around the Sunday. Around Sunday, market came here. When market came here, look at this price action. How messy that is. How messy, okay? Still price came to that last parallel gap, that 50-minute chart. You can see over here. This is the 50-minute last parallel gap. Still price came here, tick by tick. I'm gonna mark that here and here. That is the last parallel gap from 15-minute chart. But as I see, this is very messy. I will go to hourly chart. From hourly chart, I'm just doing this with you guys so that it's gonna be little helpful for you. So from hourly chart, you can see I have a lot of parallel gap over there. Still from hourly chart, we have a lot of parallel gap, but this is the first parallel gap, which I didn't explain yet about the first parallel gap. I believe that this week I will go with the first parallel gap instead of the last parallel gap. So I'm kind of done with last parallel gap. So I will start my first parallel gap. Remember, this two blue line is the Monday. Okay, so starting 3, and I'm gonna end at 4. This is the whole Monday price action. I'm going to go 15-minute chart one more time. Here, 15-minute last parallel gap. When price came here, 15-minute last parallel gap, what do you see? What do you have right now in your market? You can see very nice buy side liquidity. Now, before the buy side liquidity, the way I mark the last parallel gap from 15-minute chart, below the extreme buy side liquidity, I'm gonna do the same thing over here. Below the buy side liquidity, I'm going to mark the last parallel gap from 15-minute chart. So this is the last parallel gap from 15-minute chart, and this is the entry gap from 15-minute chart. So I'm gonna mark both of them. Both of them are valid. I just marked both of them over here. Where did price came? To the last parallel gap. Here, do I have the sell side liquidity? Now, just compare this smooth buy side liquidity and over here. From this small price action, let it here. Make it here, okay? It means something. Okay, what do you mean last? Last means the last parallel gap. See, this is the last parallel gap. Where market is over here, around this area, it is going higher, higher, higher. Where is your last parallel gap? This is the last parallel gap. When market will come from higher to lower, you will look for the last parallel gap around that area. The last parallel gap. There is no other parallel gap above that parallel gap, just below that buy side liquidity. Is there any other parallel gap? No other parallel gap. Just look all of this price action. Below this buy side liquidity, there is no other parallel gap except this last parallel gap. Now guys who are new here, maybe just one day, or you just joined today, maybe just 1 or 2 days you have joined with me, don't ask me the question, because if you stay with me for 1 week, you will understand what is last parallel gap, what is entry parallel gap, what is first parallel gap. You are going to learn every single thing. Okay, so if you keep asking the question, you are not going to be sure what I am actually explaining. Okay, so you have to listen. At the beginning you won't understand anything, but definitely if you stay at least 1 week, you will understand every single thing. Okay, every single thing, trust me brother. Just stay with me some more days. So just before 3 a.m. London session, what do you see? Where is your buy side liquidity? Where is your sell side liquidity? Where price came, and where market is actually coming? Look at this price action. So our Monday didn't start yet. Okay, I can see this very clean buy side liquidity. Price went lower. Where did it came? 15-minute last parallel gap. It just came to 15-minute last parallel gap. It came exactly over here. Before London session, it came exactly over here. Should it go lower? Why it should go lower? Should it go higher? Why it should go higher? Now market always go toward the liquidity. It never go toward the imbalance. It always go toward the liquidity. After taking the liquidity, if it wants to go, like after taking the buy side liquidity, if it wants to go for sell side liquidity, it has to reach an imbalance. So after taking the liquidity, it has to reach the imbalance. To understand the fact, this is the fact. Market will always go for the liquidity, but after taking the liquidity, if market would love to go lower, first it has to reach any kind of fair value gap or imbalance. In my opinion, you have to mark 15-minute entry fair value gap or 15-minute last fair value gap for the reversal. You will see the precision. I was showing you how precise that is and how beautifully it works. Okay, so where market should go from there, exactly where? For the buy side liquidity, which I have marked very relatively equal highs. Why I marked that high? All of these three high relatively equal highs. Now if you go here and here, they are also relatively equal highs, so you have two level over there. First is here, second is here. As both of them are very near, I'm gonna keep the highest one. This is my buy side liquidity. Now look at low here. Just look at over here. Do you see any sell side liquidity? I don't think so. Okay, this is not sell side liquidity. Is there any relatively equal lows? No. Shallow run? No. Strongest liquidity? No. Nothing. Yeah, I can mark them as my liquidity. This low and that low, they are also relatively equal lows. So yeah, obviously you can mark them as your sell side liquidity. Now compare this price action with this price action. Which one is clear to you? I'm just showing you the way I do everything from the very beginning. Okay, this is the way I actually go. But brother, price 6 imbalance to liquidity as well. No, it doesn't do that. Me, it doesn't do that. I will explain that. What you are talking about, that's a reaction. For example, okay, market is going higher over there for that buy side liquidity. Why it went lower then? For this is just a reaction, and this reaction stopped at this fair value gap. That's a reaction. Just go with my words. Trust me, brother. That just go with my words. Whatever you know, just forget. Forget all of them. Whatever you know, forget everything. Just for today's session. Just for today's session. I am gonna explain everything to you. Everything is going to be very clear. So I can see just 30 to 31 people are here. Trust me. After today's session, this whole market is going to be changed. Okay, you are going to see this market in a different way. You never see the market like that way. Just trust me, don't ask me anything, don't refer me anything. Just listen to me. Whatever I'm telling you here, everything is 100% accurate. 100% accurate. Market always go for liquidity. It never go for the imbalance. If market, for example, market is going to take that liquidity, buy side liquidity. If market take that buy side liquidity, now market wants to go lower for something like that. It take that buy side liquidity, now it wants to go for some kind of sell side liquidity, something like that, reversal. Then this high has to reach a fair value gap or an imbalance. That imbalance has to be 15-minute chart. From the 15-minute chart, either the entry fair value gap from 15-minute chart or the last fair value gap from 15-minute chart. It has to be that. There is no other way. If you ever see very sloppy price action from 15-minute chart, just a very sloppy price action, you will go to hourly chart and you will mark the hourly fair value gap. In that case you will just do that. Otherwise you always depend on 15-minute chart. I showed you the video. I have just pinned to my Twitter. Watch that video. It's all about ICT. ICT told that. I find it out precise. I'm gonna explain that. Trust me, just don't ask me anything. Don't refer me anything. Let me finish first. These 30 people are going to see the market in a very different way. So what I was talking about here. Now market is around that area. Okay, so London session didn't start yet. Look at the price action. How do you think where market came? 15-minute last fair value gap. You saw market came to the 50-minute last fair value gap and you can't see any sell side liquidity here. Look, I just made more smaller. Okay, look, do you see any sell side here? Here, I mean, what is very near to your current price? What do you have very near to your current price? Here is your current price. Very, very, very clean buy side liquidity. Is there any confusion about that? I don't think so. I don't think so. Is it hard to mark? session high, weekly high, daily high, previous day high, previous month high? No, nothing. Just go with relatively equal highs. That's all. Nothing else. Just go with relatively equal lows. Nothing else. Here I marked that sell side liquidity relatively equal lows. Compare that liquidity with that liquidity. What is more obvious? I believe that everyone will be agree with me. Brother, this buy side liquidity is more clear. So you are thinking that market is going to take that buy side liquidity. Now, why I marked that last fair value gap and the entry fair value gap? This is the last fair value gap below the buy side liquidity when market is here. So market is, I am expecting market is going higher. I'm expecting market is going higher. So when market is going higher, then this is the last fair value gap. This is the entry fair value gap. Don't ask him anything. Okay. No Allah. Okay, 100 ticks. Brother, I'm sorry, but can you please leave my session? Okay, I'm a Muslim, so please. I just can't take it. I just can't take it. I'm extremely sorry, brother, but if you just leave my stream, I will be very happy. I'm extremely sorry, brother. But yeah, you have to leave my stream. I'm very sensitive, and you just can't say anything against my religion, and I can't take it. If you just leave my stream, I'll be very happy, brother. To be honest, I don't want to be rude, but yeah, otherwise I'm gonna block you. I'm sorry. Why I marked the last fair value gap and entry fair value gap? The reason is, even if I know that market is go toward that buy side liquidity, but this fair value gap, any of this fair value gap has the power to stop the price, send it back for the reaction. I know eventually market is going to take that buy side liquidity, but I can have a reaction. That means I have a range from here to here. I have just this range, not until the buy side liquidity. This is called extreme buy side liquidity from 15-minute chart. If you ever able to take an entry from there, you are not going to hold your trade until that buy side liquidity. You have to take partial around that entry fair value gap. If there is no entry fair value gap, then you have to take partial to the last fair value gap. If you don't have any option to take the partial, just you took one contract, you have to close your trade over there. Okay, I'm just going step by step so that you can understand. Now here is the London session. Market is over here. All I will do is I will go for the fair value gap to that run. Now look at this run. Huge run, right? Huge run. How many leg do I have? One leg, one down close candle. Another leg, down close candle. Another leg, down close candle. Another leg, then down close candle outward. After every down close candle, there is fair value gap, last fair value gap, or entry fair value gap. Over here, I have also entry fair value gap and the last fair value gap. Okay, I'm here in London session. I am waiting to market go at least to that entry fair value gap. So what I will do, I will just take my entry. No, I will wait to market reach to that last fair value gap or that entry fair value gap. Now I'm going to 1 minute chart. Now I'm in 1 minute chart. Okay, so this is that in last fair value gap. This two line is the last fair value gap. Where market came to that last fair value gap first. Here, this is the first time when market came to that last fair value gap. You know where market is going. Where market is going higher. It came there. What you will look for? Market structure shift, fair value gap. That's all you will look for. After taking the liquidity, it will give you a very nice market structure shift, very nice fair value gap. You will take that entry. So let's come here. Is that a very nice market structure shift? Absolutely. Is this swing high valid for shifting market structure? Absolutely. You got the market structure shift here. You just got it. Now look for the first fair value gap and the last fair value gap. Now it is very sloppy. So you can just mark this one as your first fair value gap, this one as your breakaway gap. You will take your entry over there. You will cover the breakaway gap. You will do that, and you got stopped out. See, very fine, nice way you got stopped out. Now You can say, brother, it's not working. Absolutely, it's working. But it didn't work for you. It doesn't mean you are going to change your bias. You know, market is going higher. Your everything is telling you market is going higher. A perfect setup didn't work. What should you do? You should wait for the same thing. Market will go to that. I mean, it went lower. It has cleared more liquidity now. It has just cleared more liquidity now. After clearing more liquidity, did it give you another market structure shift? You will look for the another market structure shift. Now over here, I got another market structure. So I'm just gonna say, this is your another market structure shift. This high has shifted over there. Where is the first parallel gap? This is your first parallel gap. Is there any other parallel gap over here? No other parallel gap. So here is your first parallel gap. This candle low, that candle high. See, these two candle. You after getting the market structure shift. So here exactly here I'm just showing you everything. Okay, this is your market structure. Until this candle, no entry is valid. Then market went lower. Where is your first parallel gap? Here is your first fair value gap. You will wait three candle, one, two, three. Within these three candle, if it can reach to that fair value gap, you are going to take that entry. Brother, it didn't reach over there. Instead of that, it went higher. What you are going to do? You have already taken a loss. You didn't market didn't give you a chance. So I'm gonna take my entry over there. No, you just missed that entry. A perfect setup didn't work, and you missed that buy entry. What does it mean? That means you just missed an opportunity. A perfect setup didn't work. That's all, brother. Nothing happened except this. You have to take the loss. You have to miss the trade. You will keep waiting. You will go to your 15-minute chart one more time. There is your 15-minute chart, and you saw after this big run. See this big run, market went very high. Now you will wait another fair value gap from 15-minute chart. So to that 15-minute chart, market went higher. Did that high reach to that entry fair value gap? This high. Did it reach to that fair value gap? No. That means you have still the chance, but you will wait for another 15-minute fair value gap. It has to reach to that 15-minute fair value gap. We love you. He says he was answering no. Don't ask him anything. No. Okay. Okay. 100 ticks. If you. Okay. I'm sorry, but if it is just you are answering no, then it's okay, brother. Otherwise, I'm sorry. I mean, I don't want. Okay. We love you, man. Thank you, Jadani and Rakib Hassan. After three candle, fair value gap invalid in your opinion, brother. When you are learning this thing, you have to go with the immediate reaction. Now, for me, the immediate reaction is three candle. Now, I don't follow that, but you have to follow that. I don't follow that. Again, I don't follow that, but you have to follow that. If you start to follow the rules later, you will be able to go against that rules later, but not now. Okay, later you will be able to go against that rules, but first when you are starting, you are doing learning actually, you have to follow the rules. So yeah, you have to wait for three candle. If you get that within three candle, good. If you don't get it, just don't go it. So market has made another 15-minute fair value gap around that area. Is that last fair value gap? Is that entry fair value gap? No, nothing. It's just a fair value gap from 15-minute chart. Where is your last fair value gap? Here is your last fair value gap. Can market go lower? No, it can't go. Why it can't go? Because market reversed from last fair value gap. It didn't reach to any of this fair value gap. Entry fair value gap, last fair value gap, or it didn't take the buy side liquidity. So market is not going to go lower. It should go higher. It went lower. Why? To trade that fair value gap. So that's why you mark that 15-minute fair value gap. You will be in 1-minute chart one more time. Already you have taken a loss. You missed an opportunity to take entry. Now you are waiting here to your 1-minute chart one more time. Here, when market came to the 15-minute new fair value gap now, this is the first time market came here. What you are looking for? Just a market structure shift, nothing else. Just a simple market structure shift, nothing else. Market went lower, went higher, just went one more time lower, went higher. You got your market structure shift over there. Here, okay. Now you will look for the same thing again. Where is your first parallel gap? Where is your breakaway gap? You can see this is your first parallel gap. I'm gonna mark it. This is your first parallel gap. Where is your last parallel gap or the breakaway gap? Now I can see this is your last parallel gap or the breakaway gap here. Okay, you will take your entry over here. After getting the market structure shift, you will wait for 3 more candle. Within 3 candle, if it can trade that parallel gap, you are going to take your entry. So you can see the first candle has take entry over there, and as you will just cover, maybe just go with this low because this is the London session. Even if you go to that low, you know it's gonna be just 10 handle. Where should be your target? There should be your target. Are you going to take that buy side liquid? No, this should be your entry. Just this can, I mean, what to say, the entry fair gap from 15-minute chart, that is going to be your target, not there. But if you have more contract, more than one, then you can go for that highest buy side liquid. Now still this is huge, 84 handle. I am not agree with you. Do I have any other level here from 1 minute chart? No, I don't have, because lot of price action. So what I'm going to do, I'm not gonna hold my trade until there. I'm going to mark it until here. See this high and that high, they're relatively equal highs. At the same time, this is the shallow run. Okay, so this high and that high is the shallow run. If I ever see the shallow run, the high of that shallow run is my target. It is going to be my target over here. But brother, it's just 1:1 1.69. I have already taken a loss. I don't want to close my trade over there. I want to go for that entry fair gap or for that buy side liquid. It's up to you. If you ask me, I'm done. When market will be here, I'm done. But if you want to force more, I need more run. In that type of situation, I will go with standard deviation. Low, high, lower low. Between two low, the middle run, lowest body close candle, highest body close candle with standard deviation. I will go until the 1 - 1.5 standard deviation. So here, that will be my target. It's already lower than that target. In that type of situation, I'll go over there. Is there any last favorable gap just below that buy side liquidity? You see this price action, there is no option, no last favorable gap. But brother, I have favorable gap, last favorable gap over here. Just look at the distance from here to here. Is that just below that buy side liquidity? No. If you had seen a favorable gap, last favorable gap around that area, just for example, there is a last favorable gap. You have to put your target over there, and then if you have two more contract, I mean more than one contract, you have to take a partial over there. You can hold your trade until that buy side liquidity. But this going to be very small trade, and I have already taken a loss here. I don't care, brother. This is the rules. You have to trade like that way. This one setup is not going to mitigate your loss and is not going to make you millionaire. But brother, it worked perfectly. Came here, then why you are not going to go there? This is just luck. Just luck. Market was so much uh, hurry, or it was some kind of unfair or something. That's why market came here. This is just a luck, nothing else. So yeah, if you ask me, this is my trade over here. I'm gonna put my stop loss below that low because this is London session and it's going to be 10 handle. But what is the rules? You have to put your stop loss below that breakaway gap. Now, not exactly the below the breakaway gap, because it is a very small breakaway gap. You will give it little more space, so because this is very small breakaway gap, if you ever see this type of huge breakaway gap, huge, in that type of situation your stop loss will be below the consequent encroachment. Still you are going to give some more space for the wick. Okay, wick can go to that breakaway gap. Now if you ask me where I'm going to put my stop loss, exactly below here or here, no, I'm gonna give it little more space, maybe just below that consequent encroachment of that 50-minute parallel gap. Still if it go with my stop loss limit, you can say 8 handle, nothing, I will go with that. This is my perfect place. I would love to put my stop loss over there. And here, this will be my trade. So 1 is to 2. This is exactly my trade. So we had one loss, then we missed an opportunity over here. We missed an opportunity. Trust me, every single time you are not going to miss the trade, like over here. Though it spent more time over here. Now, one more thing. Is it inside the session? London session? Absolutely. The London session closed at 6. So this is 6. It didn't happen after 6. If this setup happened after 6, then no, it's not valid. Breakaway gap and fair value gap are same. Obviously, breakaway gap just a name of a fair value gap. So breakaway gap is just a name of a fair value gap. Most of the time you will see market don't reach to that breakaway gap. It will tap to the first fair value gap, then it will expand higher. So yeah, sometimes you are going to miss the opportunity if you wait to price tap to the last fair value gap. And the way ICT told, you have to take your entry to the first fair value gap and your stop loss has to cover the last fair value gap. This is the way ICT told, and I'm just giving you some name. So first fair value gap is the entry fair value gap. Last fair value gap is called the breakaway gap. Okay, here I have some volume balance, so you can cover that volume balance as well. Okay, I can say it was FOMC week, volatility and smart money trap engineering. Yeah, still you will be able to find some trade. Still you are going to able to do that. I'm gonna explain that thing. Okay, brother. So whatever I'm explaining, it's though it's hindsight, but still I'm giving you the logic. Why you will still look for the buy? First, this is the 50-minute last fair value gap. Price came here to that last fair value gap. You got your market structure shift, very immediate reaction, but it didn't work. It went lower. You got stopped out. Perfectly okay. You should be happy that you got stopped out. Then market gave you another market structure shift. It didn't give you any chance to take the entry. Went higher. Come back again to new 15-minute fair value gap. Still you are bullish. Why you are bullish? Because market didn't reach to that fair value gap, or it didn't reach take that buy side liquidity from your 15-minute chart. You know market is going toward that buy side liquidity, but at least to that entry fair value gap. So you know that from 15-minute chart. Until price reach any of this level, your direction, you can't change your direction. So this is how I made my direction, and every single time price went lower. See, it was falling. It was falling. I was seeing this as a liquidity taken. Okay, it was falling. So I took an entry here, maybe here, and I got stopped out here. That doesn't changing my bias. It doesn't changing my not to say, I mean, my direction. No, market is not going to change my direction. I'm still bullish and I'm seeing this more liquidity taken. Then market give me the market structure shift. Actually, in this type of situation, I look for the breaker. Uh, that's different thing. I will talk another day, but here I'm trying to give you the most easiest way to find the direction. The most easiest way, you will look for the setup. Price went higher, it is falling again. So why it is falling? Remember, there is your 15-minute fair value gap. 15-minute fair value gap, not the 1-minute fair value gap. It came to that 1 minute entry fair value gap. This is the last fair value gap. So you are going to take your entry from that 1-minute entry fair value gap? No, man. You can't frame your trade from 1-minute fair value gap. You have to frame your trade from 15-minute fair value gap. Simple thing. How do you know market is still going higher? Because your liquidity is over here, which didn't taken yet, and it didn't reach to entry fair value gap or the last fair value gap from 15-minute chart yet. So market is not actually falling. It is just a reaction here. The reaction is from 15-minute fair value gap. Go to your 15-minute chart one more time. See the reaction from 15-minute chart. See this high and that high. They are relatively equal highs. Market has taken that relatively equal highs. This is the 15-minute entry fair value gap. Another leg. See, this is another leg. This is the entry fair value gap. Price reached over there. This is just a reaction. Price went lower. Why did it came? Again, an fair value gap. You will try to take another entry over here, and the way I explain the trade over there. Now I will go to 1-minute chart one more time. Now here I will go with 7 a.m. Okay. Now here is the part. Very recently I learned about this 7 a.m. entry. The reason is ICT, very recently ICT talked about the 7 a.m. entry. Okay, so, I mean the 7 a.m. kill zone. I never knew that 7 a.m. is too powerful, and to be honest, man, it was just awesome. Okay, awesome. Yeah, stoic trader, I still agree with you. I'm just showing you the price after effect. It was unfair, but it was logical. I'm just explaining. So when I will be in Tuesday, then you will have no complaint. I'm just keep explaining the price action. This is unfair. So you are not going to see this in Monday. And when you are not going to see this, you are not going to get this run. See this run, you are not going to get that in Monday. Even if you get it, that's why I told you to mark your buy sell liquidity here, not there, because this is Monday. You have to close your trade over there. You saw this. This was just extremely bullish. Market was unfair. That's why market went over there. But you are not going to see this random. I mean consistently. You are not going to see this. That's why I marked my buy sell liquidity over there. This is possible. If you mark your buy sell liquidity over there and in Monday you will get this type of small move, you know, it's very simple. You can get this type of a small run. You will keep getting that. See this run, small run. So from here to here, this 40 to 50 handle run, you will get that simply every Monday. Just go the Monday and do the what to say, I mean back test, and you will see 40 handle, 30 handle. It's simple. But just let me show you that. Okay, otherwise you will still complaining, brother. So is that Monday? Yeah. So this is another Monday. Okay, I'm just showing you the Monday. Here you can see this is Monday. From here to here, how many handle? 160 handle. See, 160 handle. And you can see Monday 11, just Monday. Just look at the Monday London session. Where is London session? So here, I guess. Yeah. So from here to here, sorry, here, 90 handle. See. So yeah, like 40, 50, 60, 70, 80, 90 handle is simple in London or around the Monday. Monday session, it's random. You will always get that. But yeah, you are not going to get this huge run. See, from here to here, you are not going to see that. That's why I told that try to understand, brother. I'm whatever I'm telling you here, this is the rules. That's why I told you will take that entry. If you can manage to take your entry here, your target will be that, not that huge run. Your target has to be there. If you take more contract, then maybe you can take a partial, then you can trail stop loss. If you got stopped out, cool. But that should be your target, okay? So yeah, I hope, brother, your doubt is clear now. Now here is 7 a.m. and 7 a.m. kill zone. I'm gonna show you the thing, the way I actually see. I don't need anything or any 15-minute fair gap, but if you go to 15-minute chart and if you find out any fair gap around that area from 15-minute chart, it's perfect. Okay, it's much more better. So here you can see the 15-minute fair gap from here. I'm gonna mark it around 7 a.m. Okay. Now, why I am still bullish? Arjo says major news weeks are insanely volatile. Uh, I am not agree with him. Not agree with him absolutely, because huge news week actually not volatile. It's choppy. Okay, so yeah, next week I will show you. It's more. I mean, most of the time it's choppy. Okay, market actually keep making the liquidity, so it's not volatile. It's choppy. I don't know exactly what he told, but I'm not telling he is wrong. I'm just telling my opinion. In my opinion, the huge I mean news weeks are choppy week. That's why NFP week we should not trade. If we get the volatility, we have to enter into the market. If you knew that this week is volatile week, then every single day is a possibility to trade. When we don't trade, when we don't have the volatility, we should not trade. Without volatility, we should not trade. Okay, so that's why the news days are better to trade, because in news days we get the volatility. So exactly, I'm not telling he's wrong, but if he tell that, maybe this is his opinion, but according to ICT it's not right or it's not correct, because news weeks are not volatile, it's choppy. Okay, so here I'm gonna explain the 7 a.m. entry. So you got that 15-minute fair value gap. What is your bias now? Are you looking for sell from here? Okay, around 7 a.m. See, this candle is around 7 a.m. What you are looking for sell, or you are still looking for buy? What you are looking for? I'm looking for buy. Why? Because my buy sell liquidity is still not taken. I don't have any sell sell liquidity, nothing I have. Just look at this from 15-minute chart, nothing I have. So I'm gonna go to 1 minute chart one more time, and from 1 minute chart and on minute chart I'll be here. That is that 15-minute fair value gap here. So price went lower. Why did it reach to that 15-minute fair value gap? What I am looking for now, just a market structure shift. Now this is a huge market structure shift. According to that high, I got that market structure shift over here in 7 a.m. If you are probably bullish and market didn't take your buy side liquidity, most of the time you will get just one market structure shift. So if I go in Tuesday, I will show you again. If your bias is bullish from the first market structure shift or huge candle, if you get an opportunity to take entry, you should go for that. When I will be in Tuesday, you will understand about the 7 a.m. entry. Okay, around 7 a.m. market went lower. Is it going to fall? No. Why did it went lower? To take that sell side liquidity. See this low? It has been taken. Why did it reach 15-minute fair value gap? Do I need that? No, I don't need that 15-minute fair value gap. Still, I have that 15-minute fair value gap. I'm overconfident. What I'm looking for now, just a market structure shift. Is that a displacement? Absolutely, this is a displacement. Market structure shift, I got the market structure shift. Was there any immediate reaction? I don't have the immediate reaction. Should I go for that? If you are confused, don't go for that. I will go for that. Why? Because this is 7 a.m. kill zone. So when I will be in Tuesday, you will understand the 7 a.m. kill zone again. So that is the 7 a.m. kill zone, and market went higher. Okay. Then I will go to 15-minute chart one more time. Here now, this is the time for the new work session. Okay, so I'm gonna mark the new work kill zone at 9:30. So this is 9:30 candle, around 9:30. Okay, market went higher. It just came here to that exact area. It came here, then it went lower. Where did it came? A random area. Where is your random area? Where is your last parabolic gap? Here. That is your last parabolic gap. Now if market would love to go lower, where should it reach first? To that parabolic gap. There should it reach. But brother, it has taken the extreme buy side liquidity. Then why it should go over there? Even if market would love to go lower, it has to reach to that parabolic gap first. That is the rules. It has to reach over there. That was random, and I told that market can't do that. It has to correct that. So before reaching over there, it can't go and take that low. It can't do that before reaching over here, before doing the correction over there. It just can't take the extreme liquidity. Okay, exactly. Beginning to notice. Speak. What is that, brother? Hey Daniel, how are you, brother? MMXM. Okay. But Stick, I didn't understand you. Okay, what did you say? Whatever. Market didn't reach over there, so I'll go to 1 hour chart one more time, and I would love to see if I missed anything over here. I mean, from 15-minute chart, it's very sloppy, so it can be, I mean, it can be very choppy, so it can be a fair value gap from hourly chart. So I will go to hourly chart. Was there any hourly fair value gap? No, brother, there is no hourly fair value gap. Okay, let's go to 4 hour chart now. Yeah, I have a 4 hour very nice fair value gap. So price came to that 4 hour fair value gap. Now it's going lower. Now, if you keep changing your time frame like this way, one time frame you didn't get anything, so you will go next one. If you don't get anything from that next one, you will go the very next one. Oh man, it's gonna be disaster for you, because in any kind of time frame you will get an fair value gap, right? How do you know that market which fair value gap is going to be very important for you? If you just keep forcing market to give you an fair value gap by changing the time frame. If, just for example, you didn't get anything from 4 hour chart, so you will go to daily chart. No, you didn't get any fair value gap from there, so you will go weekly chart, monthly chart, maybe 6 month chart, yearly chart. in any kind of time frame you will get a fair value gap over there, right? Am I right or am I wrong? Just tell me. I am not getting something from 15-minute chart here, nothing. So I'm going to hourly chart, nothing. 4-hour chart, nothing. So then daily chart, nothing. I will keep changing my time frame until I find out a fair value gap. Because why I'm doing that? Because I'm forcing market to give me a fair value gap around that area, so that I can be sure this is the reversal. That means you are forcing market to give you a reversal from a random area. That's why I told you, do not change your time frame. If you like hourly chart, keep in hourly chart. If you get the precision from hourly chart, stay with hourly chart. Don't go any other time frame. For me, I go 1-minute chart, 15-minute chart, hourly chart, daily chart, weekly chart, monthly chart. I go monthly chart at the first time of the month, weekly chart every Saturday or Sunday, daily chart every single day, 15-minute chart every single session, 1-minute chart for every type, every entry. That's all, brother. If I don't get anything from 15-minute chart, I don't just change my time frame. Yeah, if the market is very sloppy, like over here, is it sloppy? No, this fair value gap is clean, but brother, it closed by that week. So why you are going to mark that on? Because it closed by the week. I don't care about the week. If it was closed by the body, then I would go to hourly chart. If I saw from hourly chart market is very sloppy or very, rusty, then I will go to 4-hour chart. Because I'm not going to get anything from 15-minute chart. It's very messy. I'm not going to get anything from hourly chart. It's very messy. Then I will go to 4-hour chart. Otherwise, I will stay in 15-minute chart. Here, I saw this. Nobody closed that fair value gap. It's valid. I'm gonna use that on. That is a valid fair value gap. From where market reversed, random level. What I told you about that. It's it's kind of very rare. One time out of 100 thousands of the time. One time you will see this out of thousands of the time. If you ever see this, don't believe this is reversal. When it will be reversal? If this run can send the price below that low. If this run can send the price below that low, that means this is the liquidity. This is the leg. See this leg, whole leg, the low and the high. This is the leg. If this can take the liquidity, that means it was a random reversal. And I don't like that random reversal. It market has made something incorrect, it has to correct it. It has to correct. Okay. So when this thing and that thing actually broken before New York AM session, I'm gonna remove them. I was why again guys, why I marked them. I knew that market is going toward that, but I can have some reaction from these two fair value gap. I can have some reaction. Go to your 1-minute chart and see if you get any reaction from there or not. I can have some reaction. I'm very careful of that. But I'm not thinking that market is going over that, then it's going to fall. No. Where market is going? Toward that buy side liquidity. From the very beginning, I showed you how you will mark the liquidity. This is how you will start your day. This is how you will read your price. You are not going to change your bias by seeing some kind of lower run. You will be understand that more when I will be in Tuesday. Okay. It's gonna be little longer. I'm sorry for that, but yeah, I'm trying to make everything clean to you. Clear to you. And if it is very complicated, let me know that. Okay, if it is very complicated, then please let me know that. Otherwise, don't ask me any question. Let me go with my speed. I will go with my speed, and I believe that after my explanation, you will have no confusion or no question actually. 7 a.m. run. Oh, okay, strike trader. Yeah, you are going to notice a lot of things, brother. Lot of things. Trust me, man. Vrinder, hey T2 brother, how are you? I'm fine, Vrinder. How are you, brother? Lenny Kiska, hi, how are you, bro? Didn't know about going live. Lenny, actually, I just made the decision suddenly, and I thought how you should spend your weekend. I thought I should do that. Okay, this is how you should go to weekend. You have to go every single day, and you have to see the price. You have to find out what you have done wrong. Okay, so you have to be very honest with yourself, and you have to find out what you have done wrong this week. Okay, so yeah, that's the thing, brother. Price reversing from a random level creates weak or turtle soup reversal. That can happen, brother. I don't know how to trade the turtle soup, but still it's not going to happen. It's impossible. Okay, it's nearly impossible. At But yes, sometimes it happens. I told you, one time out of 100,000 times it can happen. Out of 100,000 times, whatever. So where I was over here. As this didn't give me any reversal, I'm gonna remove them because everything has done already. Market has already left all of this area. Okay, so market has taken the buy side liquidity, right? Market has taken this obvious buy side liquidity. I was expecting market will tap over there to that fair value gap. So my bias is still bullish. Still I'm bullish. Now when I'm still bullish, first job is I will mark the 15-minute fair value gap over here around that area. I will just look for the 15-minute fair value gap. Here you can see lot of 15-minute fair value gap. Look from here. Market came here a random area. What I'm looking for? I'm looking for market will reach over here before reversal. That's my expectation. So what I'm looking for? I'm looking for buy. Am I looking for sell? No, I'm not looking for sell. I'm just looking for buy. I am not going to believe that this is going to be the reversal, market is going to fall. No, I'm not going to believe that. Though market has taken that extremely buy side liquidity, before reversal it has to reach to that fair value gap. That's my expectation. Why? Because I have this 15-minute last fair value gap. It has to reach over there. That's my expectation. Okay. Good brother. Okay, Varinder. Perfect. We really appreciate for this. Thank you, man. No problem. So what is my bias still? My bias is still bullish. What is the reason? Because of that random reversal. Again, random reversal. So I'm bullish. Now I saw market is falling, right? Market is falling. I'm in 15-minute chart. Where market is going? Trade the last fair value gap or the entry fair value gap from 15-minute chart. How many 15-minute fair value gap do you have from here? So this is a leg. From here to here, you have a leg. How many 15-minute fair value gap do you have? Lot of. What do you do? Go to your higher time frame. Why? Because you have lot of fair value gap over there. So here. Now where I am in hourly chart. Sorry, I am in hourly chart. Why hourly chart, brother? Why not 15-minute chart? I just explained. I just explained. Go for the last fair value gap and the first fair value gap. Where is the last fair value gap? From hourly chart. This is your last fair value gap. Where is your entry fair value gap? This is your entry fair value gap. Okay, I'm gonna mark the the entry fair value gap and the last fair value. So remember, this is your last fair value gap. I'm gonna change the I'm just write it down, the hourly fair value gap. This is how I trade. Okay, and this is how I am very much confident with my direction. And you should learn this, not the entry. Entry is the most easiest one. I'm gonna show it to you again and again. This is the hourly fair value gap. This is the entry fair value gap. When market will tap to the entry fair value gap, you will start to look for buy. Why? Do you have buy side liquidity? No, you don't have. Then why you are looking for buy? Because after taking the buy side liquidity, you saw from 15-minute chart. Let me go in 15-minute chart. From 15-minute chart, you have seen that market is not going to reverse from a random area. I mean, market is going to reverse from a random area, so it can't happen. So you will look for that that fair value gap. Now I'm going to 1-minute chart. Just remember those lines. Okay. I am showing you the exact way to trade. The exact way. This is the way to trade. There's no other way. If you don't trade like that way, you are not going to be successful or profitable. Not never. Okay. So this is that entry fair value gap. Remember from hourly chart where price came first. This is the first time when price came to that hourly entry fair value gap. It went higher. Do you get any market structure? I have already started to look for buy. Why? This fair value gap is my target. This is my target. Did you get any market structure shift? No. Market went lower. Take the liquidity. Is that a market structure shift? Absolutely, this is a market structure shift. Which high you are going to mark to shift your market? I'm going to mark this one. This high is my market structure shift. Now, tell me, is this high valid for shifting market structure? Is this high is valid for shifting market structure? No, brother. Then why you are going to mark that on as your market structure shift? You didn't get any market structure shift. Let it go. This is not your market structure shift. Still, if that is your market structure shift, there is no fair value gap. Look at this price action. Is there any fair value gap? No, there is no fair value gap. Are you going to take your entry? No, I'm not going to take my entry. Wait, market is, man, you are wrong. Your bias is wrong. Market is falling. Market is falling. I don't care. I don't care. Brother, I got my market. I'm just going to show you every leg, okay? I got my market structure shift over here. Okay, let's see. Let's see, okay? This high has traded that fair value gap. So this high is valid for shifting market structure. Absolutely right, right? Absolutely right. Now, tell me, is this single high or too high? Oh man, that is too high. Do you know what does it mean? Swing high? Just one high, not too high. If you mark too high as your swing high, you're absolutely wrong. You don't know what is this, how to trade this one. So you don't know. That's why you are just seeing this, like lot of highs has traded that fair value gap. You just mark them as your market structure shift by just watching that candle. You are marking a wrong swing high to shift your market structure. You are just doing wrongly that way. Okay, so market is falling again. Brother, if I took that sell after that, market structure shift, fair value gap entry, oh man, that was awesome. That was just heaven. I just missed it because of your direction. You are thinking that market is coming here. I mean above that relatively equal highs. So that is actually relatively equal highs still. That is the also the buy sell liquidity from 1 minute chart. So I just missed it. And you are absolutely wrong with your bias. I'm gonna remove it from my chart as it has taken already. Okay, so as you are looking for buy and market is going to fall, that means I just missed all of this run. You have to miss all of this run. You have to. There is no other way. There is not even a single way to catch that one. That is called trading. If you if your bias is bullish and if you see market is falling and you try to catch that on, that means you are doing gambling. You will never be profitable trader. I am telling you, I'm guaranteeing you, I'm just write it down. If I'm wrong, come back to me. Just do whatever you want to do. You will never be the profitable trader. I'm sorry for my word, but whoever is showing you that I caught that on, I'm going to catch that on. Yeah, I would catch that on if I saw just a candle tap to that 50-minute last parallel gap. If candle could go over there, I would look for sell. Maybe, okay, not sure, but maybe I would look for sell. No, it didn't reach over here. So I'm not looking for sell. My bias is still bullish. I don't believe this shit. Random reversal. I don't believe in it. So I'm not going to take that one. If you look for that, if you want to take that one, you are gambling. Don't do that. This is your real money, not a joke. Okay, this is not a joke. I'm sorry for my uh, what to say. Okay, whatever. So market actually closed that entry fair value gap. I'm just gonna remove it from my chart. Why? Because market reached to that hourly fair value gap. Again, why I am in my hourly fair value gap? Why I'm here? The reason is from 15-minute chart there was lot of fair value gap. I'm confused with that lot of fair value gap. I went to hourly chart. I look for one fair value gap only. Market came here. What I'm looking for is still what I'm looking for. Buy. What do I need? Just a market structure shift. Brother, I got it. I got the market structure shift here. Where is your fair value gap, brother? Here is my fair value gap. Okay, I'm gonna keep it here. Here is my fair value gap. Okay. Mm, in hindsight, this is inducement that it came back later to sweep. Okay, see the flow. I don't, guys. If you want me to make it more complicated, I can do it for you. Okay, so I will make it more complicated. I will add more level over here. Trust me, lot of levels I can add, but I'm not trying to do that. I'm just trying to show you some easy way, the best way so that you can trade. You can be profitable. If you are still profitable, you are already profitable. You should not be here because you are already profitable, man. Okay, I'm not being rude, but I'm trying to give my opinion to all other people are here. There is 50 people over here. I'm trying to give them this information clearly. If you want me to add more like inducement, turtle soup, bread and butter, breaker block, optimal trade entry, if you want them, man, I can do that. but I'm not going to do that. I'm just trying to give you the easy way. Is that really easy? You will look the buy side liquidity. Why you are looking for buy? Because you have that buy side liquidity. After hindsight, it's very easy to say this is investment liquidity, maybe this is that, this is those, this is turtle soup, whatever you are telling me. It's very easy after, I mean, around the hindsight. Don't do that, okay? Just let me finish, okay? Don't refer me anything. I'm trying to give you something. Try to take just that on. Forget anything you know. Just forget everything you know. I told you, just for this session. Just forget everything, and after ending this every single fucking day, 5 days, just when I will be finished with Friday, tell me which one you would love to go. I did my life every single day, brother. Okay? Oh man, whatever. Let it go. Okay? So this is the market structure shift, right? What I am looking for, market structure shift. See this one? Oh man, I'm gonna catch that one. See, this is a market structure shift. Is that valid? Is this swing high is valid for shifting market structure? Absolutely not. Is there fair value gap? Immediate reaction? No. Am I going to catch that run? No. Market came here. I know where market is going, where market is coming. Here. I missed that entry. So take that entry over there. Never, man. Never ever do that. This is not valid market structure shift. This is not a valid fair value gap or immediate reaction. You are not going to catch that one. But brother, we missed the lower run. Now you are telling me to miss the higher run as well. Yeah, I'm telling you that. I'm just telling you that. You have to miss that. This is trading, man. Market went lower again. Where did it came? Do I need any other, I mean, time frame or anything? I mean, when market is falling, where did it came? Still inside this hourly fair value gap. See, still inside this hourly fair value gap. What every single time I'm looking for just a market structure shift. Every single time market will go lower, I will look for a market structure shift. Am I looking for a market structure shift over here? No. When market is giving me a run, then I will wait to take some liquidity first. If market can take some liquidity, then I will look for again the market structure shift. For example, it didn't give me any setup over there, then market went higher. I'm not looking for a setup here again. Market has to take some liquidity. It has to take at least that low. If market can take that low, then I'll look for again a market structure shift. Now it didn't on it. It's not only taken that sell side liquidity. It has already taken that sell side liquidity as well. All of this liquidity has taken over there. Now again, I'm looking for a buy. What do I need? Just a market structure shift. Did I get it? Let's see if I can get it or not. Now I can see this swing high is shifting over here with a very nice displacement, and I got this fair value gap. Okay, brother, I'm just telling you the fact. I got a fair value gap over there, and maybe I have this. I'll go with this buy side liquidity. Okay, I'll just go with this buy side liquidity, and below this buy side liquidity, I have, yep, yeah, that is valid. I will go to that last fair value gap from 1 minute chart. So before taking that buy side liquidity, market can reverse from that 1 minute last fair value gap. Okay, it is possible the way I explained before. Now, is this market structure shift is valid? Absolutely not. Why? Because this is not even a swing high. This is just a leg. This is just a down close candle. It's not a swing high. It's not valid. That means, brother, you are going to miss that on as well. Absolutely, I'm gonna miss it again one more time. But it worked perfectly. I don't give a shit. I just can't give a shit to you to that, okay? Because this is not valid. I'm gonna lose that entry as well. I'm gonna miss that entry. So market went higher, it's going now. When market came here, just came here, man, I got a market structure issue. So I'm gonna take that entry here. The first parallel gap or the last parallel gap, I'm gonna take my entry here. That's gonna be my target. Absolutely wrong. You are not allowed to take that entry from there. Why? Because it didn't take the liquidity. See, it has to take some liquidity, then it has to give you the market structure shift. Okay, this run you are going to miss. Man, if I stay with you, I'm gonna miss every single run. I don't care. I don't care. Then market went lower. Boom. Oh man, market is done now falling. I was absolutely wrong. Market is going to fall. Am I interested to take that sell entry? No, I'm not interested to take that sell entry. I'm only interested to take buy entry. Now, where market came again? Hourly fair value gap. Did it take some liquidity? Obviously, it has taken some liquidity. What I'm looking for again? Again, market structure shift. Is there any market structure shift here? No. Here? No. Here? No. Then, is there any? No, man. I got this huge run. Huge run. I got it. Is that market structure shift? Absolutely not. Why? Market has already came here. Look the liquidity. It never take the liquidity. It just make swing high, just swing high every single time, swing and then it went higher. This is not, it has already built the liquidity around that area. This is the place where market has taken the liquidity, some kind of liquidity. Okay, it has taken some kind of liquidity, then it went higher. As my bias is bullish until here, I'm not going to participate here, not even for a single time, not even for a single time. But brother, if I took a sell entry, can you imagine how many handle I would be able to take here, then here? I don't give a shit, man. This is trading. Now, if you are looking for sell, for example, if you are looking for sell, you don't give a shit to that buy term. It's going higher. You will you will just mark the chart in other way, the way I actually marked. Why I was bullish? I explained that. I explained everything over here. So at the PM session, I'm gonna miss everything. From the PM session or the AM session, I'm gonna miss everything. So Monday is not my day. I was unable to take any entry. So far what I have done from the London session, I take a loss, then I missed an entry, then I take a winning trade. I mitigate my loss. There will be a maybe how many handle if I took that entry, okay? That entry. If I take that entry, so I'm gonna take that entry and my stop loss would be maybe here. Yeah. So I'm going to take 10 handle loss and I'm gonna cover 17 handle. So it's gonna be 7 handle only. Just 7 handle. In Monday, I was able to take 7 handle. So brother, I actually you missed all of this run. Okay, I already talk about this. This is very unfair. Actually, in Monday you don't see it, but still, if you have the chance to take a partial above that high and then hold the rest until that buy sell liquidity or that fair value gap, you can hold it. It's up to you. I just give you the example for one contract. If you take one contract entry, this should be your Monday. Okay, this should be your Monday. Bro, you come early. Sijo, that was a sudden plan. Actually, I thought I should go with the weekly recap, the way you should spend your weekend, the way you should read the price. I should explain that. That's why I just came early. Okay. Gold analysis, please give me. No, this is not the analysis for the next week, brother. This is the past week. So this is all hindsight. Okay. Vagani. स्पीक हिंदी आई थोड़ा थोड़ा स्पीक बोल लेता हूँ पर मेरा हिंदी उतना अच्छा नहीं है भाई उतना अच्छा नहीं है increase the best can't gamble with shitty price action absolutely straight thanks man I thought live at yeah Sunday at 9 a.m. that means tomorrow it's gonna be the weekly analysis that means the next week okay so yeah I think you were talking about something to strike okay hey guys hey big mode how are you brother so that's all for Monday now my question is it clear to you? The Monday is clear to you or not? Let me know that. Then I will go to Tuesday. Okay. Is Monday clear to you or not? Then I will go to Tuesday. The way I read the price, is it easy? Is it easy or not? Just let me know that. Monday is done, so Tuesday start from 3 and until 4. So this is Tuesday. Now I will go to Tuesday price action. Okay, this is an aha moment for me, brother. Okay, Ryan, I guess you got it, man. So you like IPL? Uh, IPL, I liked it, but right now I don't watch it, brother. Yeah, it is very easy, brother, and clear explanation, bro. Explanation. Thank you, brother. Clear as crystal. Thank you, Nair. Now, when I will explain the Tuesday, it will be much more cleaner. It will be much more cleaner. Okay, very clean. Now is the part of the price action when I will be in Tuesday. Okay, it's gonna be like drinking water. Trust me, man. It's gonna be just drinking water. It's only applicable for our view is in right direction. Our bias is our profit. Ketan Patel, I'm also showing you whole story. Okay, I'm explaining you the whole story. Now, Patel, if you just join later, watch the first part. How I marked the buy sell liquidity from where I saw market is reversing. I explained everything at the first part of this streaming. So if you start from the very beginning, I believe that, I mean, it's not gonna be very hard for you to do that. Okay, it's not going to be to do that. Okay, whatever. Jack Vagani, sir, you were amazing analyst. I am your new subscriber. Okay, welcome to my channel, brother. Where you from? I'm from Bangladesh, brother. Okay, just give me 2 minutes. I need to drink some water. I was fasting. I need to drink some water, so I'll be back, and then I will explain the Tuesday. If anyone is thinking that it's gonna be long video, yeah, it's gonna be long video because now I have to finish every session, London session, New York AM session, and the PM session of Tuesday. Then I will go Wednesday, Thursday, Friday. And in this Tuesday, now I am going to add the narrative. Okay, here I didn't talk about the narrative. Now from here, I'm going to add the narrative. Okay, so it's gonna be more easier to you to understand the price action. Very easier for you to understand the price action again. Okay, so yeah, I'm just coming back and then I will explain the Tuesday with narrative. Now it's gonna be more easier to understand. Hey Dio, I'm just coming back, brother. At the same time, if you guys just didn't give me the like, don't forget to give me the like. I'm a like seeker, okay? So please don't just forget to give me the like, and yeah, I'm just coming back. Pardon me for my absence. I hope that you are still here. Yeah. Now, Tuesday. What I'm going to start my Tuesday with? Note taking. I will always tell you, brother, please take the notes. But you don't know how to take the note. You will take the note the way I tell you, starting of the day. Okay. I'm going to make it from here. This is Monday. This is London session is going to start from there. Okay. From there. I'm unable to use the replay mode because I don't have the data, I mean the plan from TradingView, because I'm unable to do that right now. Maybe from next week, sorry, next month after Eid or after Ramadan, I will be in Portugal, then I will be able to buy the plan. From Bangladeshi credit card, I'm unable to buy the plan. Okay, so that's why. Whatever. Now you will take the note the way I'm starting my day. First, I do that, then I do that, then I do that. You will write it down. First, this guy has to take, this guy do that. So you will write it down as your direction. You don't do it when you are watching the live. You will do that when I will be end the live. Okay, then you will go every part and you will take the note this way. Okay, this is the way to do that. I mean, taking the notes. Now, market is around that area. What we have seen in Tuesday? We have seen that market came here from a very random level. It reversed. Then what should be your target? Your target has to be there. That fair value gap is going to be your target. Okay, but brother, you always tell us to go for the liquidity. I always tell you to go for the liquidity. Why I'm not looking for the liquidity? This is the game of the narrative. From Sunday, I do the weekly analysis. I'm not going to go with the weekly analysis. You have to do, I mean, watch the weekly analysis for that. Every week I have a direction. Last week my direction was market will go higher for the buy side liquidity. That was my direction for last week. I am bullish. Now this is Monday. Around the Monday you don't look for the narrative or the bias, your bias. You will look for some kind of 15-minute buy side liquidity, 15-minute sell side liquidity for Monday only, because this is called the accumulation day. So market will be accumulated. This is unfair price action, but you will look for small price action. It will just take the buy side liquidity, it will take the sell side liquidity, it will be choppy. So you will just look for the buy side liquidity and the sell side liquidity. You don't need to think about the narrative. From Tuesday you will start to look for the narrative. If my bias is bullish, market should go higher. In Tuesday it has to go low, and it has to take the Monday low, at least Monday low. If it is able to take the Friday low, that's much better, but at least it has to take Monday low. Now where is your Monday low? I can see Monday start from 12. So here I'm gonna mark the Monday low to that low. Okay, so this is Monday low. I'm gonna mark it as a sell side liquidity. Just marked it as a sell side liquidity. Then how you trade? By watching CME. I know that is delay 50 minutes. No, I have the data plan every month actually. And until now I got the data plan, but I'm not sure about this week. And I trade through the Tradeovate, so I don't need the data plan as well. So Tradeovate actually, or Top Step actually provide the data for me. Okay, but yeah, still it is what it is. Whatever. So this is the Monday low, and I marked it as a sell side liquidity. Now the narrative started to play. What I'm thinking over here, I'm thinking market has taken the buy side liquidity, reversed from a random level. So it has to reach over there for falling. But today is Tuesday. My weekly bias is bullish. I know market is going to go higher. What do I have? Here is the part of the news. When you have the news, you have the news at Wednesday, Thursday, Friday. You have the news this 3 day. Also in Tuesday you have the news. For example, in Tuesday you have the news as well. So by using the Tuesday news, it will go lower, because accumulation, manu accumulation, manipulation by Tuesday news, expansion by Wednesday news, continuation of the expansion of Thursday news, Friday news is going to reset. So it can go little above of Thursday. Sometimes it do that. Most of the time it don't go above the Thursday high. Instead of that, it come back again into the weekly range and closed over there. So this is your weekly narrative. I have already uploaded the videos about the weekly narrative. You can check that out from my YouTube channel. Okay. So here, this is Tuesday. So I know market is going lower first. Why? To take the Monday low. Brother, you told us that you don't care about the previous day low. This is for narrative. You have to understand that market has to go at least below that Monday low. It's you have to expect like that way. But it does it mean that market is going so far? Maybe here it is coming here. No. Market, if you see market is going lower, then you will mark the at least Monday low, and then you will look for the fair value gap that is obvious from 15-minute chart, either the last fair value gap from 15-minute chart or any kind of weekly fair value gap or daily new day opening gap, sorry, weekly new week opening gap or new day opening gap, anything like that. Okay, you will look for them. Now, are you looking for sell side liquidity? No, I'm not looking for sell side liquidity. If you see kind of sell side liquidity, very clean obvious sell side liquidity, you can mark them. For example, you can see this low, this low, this low, they're all relatively equal lows. Here I'm gonna mark them here. Okay, they're also relatively equal lows, but as they're at the new week opening gap level, I'm gonna remove it, but you can see this relatively equal lows or whatever it is. So this is Tuesday, and you know market should go first toward that Monday low, at least this low. Then it will reverse from not a random area, from 15-minute either last fair value gap or the entry fair value gap. If it is overzealous, it can reach until the new week opening gap, because you are going to get that new week opening gap from Sunday. It can go for that, or maybe it will go to new day opening gap, maybe hourly last fair value gap, whatever. Just it can go below that sell side liquidity. So that is your first thinking. So over here right now, market is over here. What is your bias? What you are looking for? You are looking for to go below that Monday low. But brother, I am not sure about my weekly analysis. Maybe I didn't do my weekly analysis. Then how can I be sure that market is going lower toward that? It's very difficult for you. Then you have to do the weekly analysis. You have to do. You have to have a bias from weekly. How to do that? I will do that tomorrow at 9 a.m. Come and join me. I hope that I will be able to clear that to you. Okay. So in my mind, I know market should reach over there. It should not go below that low. Below that low, it should not go. If it wants to go, it can go below that Monday low. Monday, when it has started around 12. So this is the 12th low, but as I can see a swing low, so I'm gonna mark it here. So Monday start from 12 a.m. New York local time. There is a swing low around that area, so I just marked that low. Okay. So yeah, market went higher. I know market should reach over there before falling. Even if my weekly bias is wrong, market really would love to go lower. If it has to happen, I will be sure by Tuesday. If I see a lower run, then I will be sure. Okay, my month weekly analysis maybe is accurate. Maybe market is going to go high. Maybe I'm right with my weekly analysis. Every week analysis, you are not going to be right. Okay, so I will be here around uh, 3 a.m. in the morning. What do you see? This low, that low, that low are the relatively equal lows. This low and that low are the relatively equal lows. Obviously, do you have any buy side liquidity around that area? Except here, I have this buy side liquidity over here. I have this buy side liquidity over here. This high and that high, they are relatively equal highs. I have this 15-minute last fair value gap over here. But brother, why do you need that 15-minute last fair value gap? 15-minute last fair value gap, because this is also 15-minute last fair value gap where market has to reach. Still, when market has made this leg, it can trade that fair value gap and it can reverse from there. So I need that one. If that is my target, it can reverse from there. Hey, good night, brother. See you again. You don't forget about my JB analysis. Okay, I think then I have to stop with the Tuesday. Then I'll go over there and I'll just end my session. I have this relatively equal lows. I have this relatively equal highs. This is the last parallel curve from 50-minute chart. I have in my mind that market can go below that Monday low. So even if market would love to go lower, let me start from here. Okay. Even if market would love to go lower, first it has to trade any 50-minute parallel gap. Do I have any 50-minute parallel gap? I have this 50-minute parallel gap or the last parallel gap from there. So I'm gonna mark it here. This is the last parallel gap from that leg. So I'm gonna mark that on as well. Every level I'm going to mark them. Okay. Now I'm going to go 1 minute chart. So here is my 1 minute chart here. Okay. Yeah, I'm going to mark. Remember, this is that 50-minute parallel gap and the last parallel gap from 15-minute chart. What I'm thinking, market can take that social liquidity or Monday low before even going here to that area. This is the last parallel gap from another leg. This is also the last parallel gap from 15-minute chart. I saw around London session. This is the London session. Market was consolidating. It didn't reach over there to that parallel gap. Here, do I have any parallel gap from 15-minute chart? Let me go over there one more time. Is there any 15-minute? Sorry, let me mark it. Yeah. Is there any parallel gap from 15-minute chart? I have. Where do I have that 15-minute parallel gap? Here. Is it valid? No. Why? Because this run has fully, it has fully closed that parallel gap. So I don't have any 50-minute parallel gap to that leg. So I'm gonna remove it. Here I have another 50-minute parallel gap that is valid. Here, okay. So I'm gonna mark it from my chart. There is my 50-minute parallel gap. Just below that parallel gap, there is another 1 minute. I mean, another small parallel gap. I'm not gonna mark it because I'm thinking market will go lower. Why I'm thinking that? Because of the narrative. I know market should go lower first to take that sell liquidity before going higher. This is the manipulation there. I'm going to go 1 minute chart one more time over here. So this is that lower parallel gap over here. Price was inside this parallel gap, just inside that parallel gap. Now I'm not looking for buy, so I'm not interested to look for any market structure shift. You can see market went higher, it went lower, it went higher. Finally, it came here. That was the market structure shift around that area. Here, this is the market structure shift. This is the parallel gap. Is that immediate reaction? Absolutely immediate reaction. Am I going to take that buy over here, here, and I'm gonna put my stop loss maybe here, and my target is here. Oh man, how beautiful that trade is. No man, it's not my trade. I did my weekly analysis. I know market should go lower. I'm not looking for buy setup. This parallel gap, I don't care about that parallel gap. This setup, I don't give a shit of that parallel gap. Nothing. I don't care about that. Then what you are looking for? I'm looking for sell. Where you will look for sell? The London session start from there. Came here. Where? Here. This is the first time price came to that 50-minute last parallel gap. Did I get any market structure shift? No. Market went through that. So I don't need that one as well. Where is my another last parallel gap? Here. I'm still looking for the sell setup. Did I get a sell setup here? Market has went there, cleared all of this buy side liquidity has been cleared. Also this high has been cleared over there. Is there any market structure shift? Now this low is valid for shifting market structure. Absolutely, it's valid for market structure shift. Why? Because this low traded that parallel gap. Did I get the market structure shift when market was falling? No, I didn't get. Is this setup valid? No, it's not valid. If this candle could close below that low, I would take that sell from that parallel gap and I would cover that area. Why? I wasn't going for that parallel gap because I'm gonna mark this one. This is my extreme buy side liquidity, but below that extreme buy side liquidity, I saw here lot of relatively equal highs here from 1 minute chart. Now when I got that relatively equal highs, just here I am going to believe that market is not even going to trade that parallel gap, this parallel gap, because this is at the level of the liquidity, buy side liquidity, or above the buy side liquidity. So here it's nearly impossible to go over there to the top parallel gap. But if market is overzealous, it can reach until that fair value gap. That's why I'm gonna cover that fair value gap. Where is my target? Am I going to target that low? No, I'm not going to target that low. Then where should be my target? My should target will be maybe this fair value gap, this fair value gap, or the last fair. See this last fair value gap? That will be my target here. This will be my target, and I will go for that trade. Maybe here, and later maybe I will be stopped out here somewhere. Whatever that doesn't matter. I don't care about that. Is this entry valid? No, it's not valid. Why? Because I didn't get my market structure shift over there. But brother, later I got this huge run. Is it valid? No, it's not valid because you already got a swing. See, a swing. Before shifting the market, you got a swing. So this is another leg. I don't care about that one. Yeah, I care if market can take some buy side liquidity again, and if it can trade from any other fair value gap from there. So over here actually, if it can make a fair value gap like over here, it has made another fair value gap from 15-minute chart, right? Over here, this is a 15-minute fair value gap. I'll go to 1-minute chart again. Okay, so here around that area. Well, here. So this is the new fair value gap from 15-minute chart here. Okay, here. If I saw that any of this candle could go and take some buy side liquidity, tap to that fair value gap, then again give me a market structure shift. For example, this high actually came here, cleared all of this buy side liquidity, then give me this run. This run, okay? I would mark this as my market structure shift here. And I would look for first fair value gap, immediate reaction within 3 candles. I would love to take that sell until that last fair value gap. I didn't get that. What does it mean? That means I don't have any opportunity to take entry here. No opportunity to take entry here. I'm gonna miss a whole London session then, brother. Yeah, I'm gonna miss it, man. I don't care. I'm just missed the London session, just one session. Brother, you are telling us not to take that buy entry. You are telling us you are not going to take that sell entry. That's trading, man. That's called trading. What you are doing, it's not trading. You are just chasing the price. You are just seeing market is falling. You are going to take entry from that. That's why you are not consistently profitable. Trust me, man. No one is going to show you that. Everyone will just show you. See how beautiful the setup was. How beautiful the setup was over there. Very nice displacement. Take your entry over there. No, this is not logic. It's not logical. You can't take that entry. Now, is it going to hit your mind, man? I mean, is it logical? You will find it out. Okay. Now, I'm coming to 7 a.m. now. Okay. What do you see from the 7 a.m.? Market went higher. Take the liquidity. Okay. All of this liquidity has taken. Very nice market structure shift. Very nice displacement. Market structure, whatever. I'm gonna catch that run from there. But brother, it's just before the 7 a.m. Around 7 a.m. This is around 7 a.m. But just displacement, nothing else. I know market is going lower, at least to that Monday low or relatively equal lows here. That was the relatively equal lows. Where was that? I mean something like that. Okay, that was the relatively equal lows from 15-minute chart. So I know that market is going at least until that. Then if it is overzealous, it can reach until that sell side liquidity. I'm gonna take that entry. When I explained the 7 a.m. setup, what did I say? I don't need that run to reach to that any fair value gap from 15-minute chart, but I will go over there to 15-minute chart one more time, and I will try to find out any 15-minute fair value gap around that area. If I get any fair value gap from 15-minute chart, I will be overconfident. Maybe I'm absolutely right. That's why I need that fair value gap. Otherwise, I don't need it. Now you can do that for your overconfidence. No, market is actually falling for your overconfidence only. Okay, so I missed that run. Now in 7 a.m. I'll be here and I will see the price around that area. Where did it reach? 15-minute fair value gap. Did it take some buy side liquidity? Obviously, it has taken the buy side liquidity. Was there any market structure shift? This swing low is valid for shifting market structure. Absolutely, this is valid for shifting market structure. Why? Because this swing, I mean, you know the reason why this swing low is valid for shifting market structure. But brother, I don't want to go with that. go with that because it is here. That's why I'm showing you that you can mark that as your market structure shift as well. Was there two fair value gap? Obviously there's two fair value gap. What is that? Entry fair value gap. You will, is that immediate reaction after making the fair value gap? Did it reach over there within three candle? Obviously it went over there. Are you going to take the entry? I'm gonna take the entry to that candle. Where will be my stop loss? My stop loss will cover the last fair value gap. Where is your target? This is my target. This low is my target. Why that low, brother? Because from 50-minute chart, I saw there is relatively equal lows. So I'm gonna target that low. But brother, I want to hold it until the Monday low. You have to take partial to that sell side liquidity. If you have more than one contract, go for that Monday low. I want to hold it until new week opening up. I'm I'm extremely against your decision. Extremely against your decision. I don't support it until Monday low. It's okay, or maybe some last parabolic from 50-minute chart or 1-minute chart, you can hold it until there. Yeah, you can go that, but you have to take partial over there. But brother, it's gonna be 1 is to 1.66. I don't care. I could show you like this way, right? I could show you like that way. Then how much it will be? 1 is to 3.77. I don't care. Not logical here. But brother, if it went higher and stop me out, what I'm going to do? You are going to take a loss. A perfect setup didn't work for you. Remember the Monday first entry? That was a loss. That was a loss. Here, it should work. But if it doesn't work, you just take a loss. You have to take the loss. I want to hold it here. If you want to hold it here and you have the one contract, when market will just take that low, your stop loss has to be covered the, I mean something like this. Okay, you have to cover that, because even if you are wrong, market doesn't go and take that liquidity, and you are so greedy. So even if you are wrong, market went higher, maybe you will be stopped out to the break even, or maybe you profit, I mean cover some profit. So you will take little profit and then you will be stopped out. If you are extremely wrong and market doesn't want to go below that low, that's sell side liquidity. Then why sell side liquidity? Because Monday low. Why Monday low is important, or sell side liquidity? Is it because it's previous day low? No, because of narrative. We know the narrative. Our weekly analysis is telling us market is going higher. So in Tuesday, market has to take the Monday low. It has to take that. That's my expectation. Not always. Most of the time, you will see it will take Monday low or Monday high around in Tuesday. Okay, most of the time you will see that. But if it doesn't take that low, or if it just trade the last parabolic up anywhere, I mean just give you little reaction, then it went higher, it's absolutely perfect. That's why I told go for the liquidity and don't hold it until the Monday low. This is trading, man. You have to do that. You are going to miss that on, you are going to miss that on, because market didn't give you the setup here. This setup is just against your thinking, against your story, the way you are reading the story. This is against, you are not interested to take that on. So whole month, I mean London session, you are going to get no entry, nothing. Here market has taken the liquidity, it has traded that 15 fair value gap, so you are overconfident now. But brother, it has made relatively equal highs, that high and that high, they are relatively equal highs. So what you are thinking, that market is not going to take that high? No, I'm not thinking like that way. Why? Because I know eventually market is going higher. Not today, maybe tomorrow, maybe the day after tomorrow, maybe in Friday. In that type of situation, I will mark them as my target. Right now, Tuesday is manipulation day. It should go lower. Don't like it, don't like to miss that entry, just leave me. But this is trading. Everyone will show you how to take that entry, how to take that entry, how to take that entry. But I'm showing you the entry you should take. Here, around 7 a.m., it's absolutely valid, as ICT just recently cleared that the 7 a.m. kill zone entry is valid. So I'm gonna take that. Why I'm going to believe this stream run? I'm going to believe it because I'm thinking market is coming here. That's why I'm believing it. If I was thinking that market is going higher, I'm not gonna push my button by seeing that on. Though it was so perfect, I was not going to push that on. If my bias was bullish, I would wait for a higher market structure. Fully different thing. Okay, if in that type of situation I saw that, I was going to miss that trade as well. Like here I missed that trade. A perfect setup. Market structure shift, perfect immediate reaction, boom. I missed that. I was going to miss that as well if my bias was bullish. If my bias was bullish, maybe I would be able to catch that on. Okay. Oh man. Okay, I think bias. Okay, no, don't stop. Okay, Buros. Vivek Naikar. Kitan, how many trades you took whole week? Okay, to ask something to Ketan actually. Okay, this week it recap is a clinic. Great explanation of the daily breakdown based on the weekly prediction. Okay, see the pro. Actually, you have to do this every weekend. So I actually do that. Still now I do that. Okay, so I thought, okay, let's do that with you guys. But yeah, I maybe if I did it by myself, I have already done 3 times. Okay, but as I am explaining everything, it's going to take more time. But yeah, still it is what it is. So I'm gonna remove the level from here as everything has taken. I'm going to go to 15-minute chart one more time, and I'm gonna remove this one from my chart, this one from my chart. I am going to mark the New York AM session now. So where the New York AM session is going to start around 9:30. So this is that 9:30. Okay, I'm gonna put my chart over here now. Just before 9:30, what did you see? Where price came? Very near to new week opening gap. Very near to new week opening gap. See, where did it trade? I'm gonna mark this thing. What is that? 15-minute last fair gap. Where price reached to 15-minute last fair gap. Can market reverse from there? Obviously, it can reverse from there. Why? Because market has done the manipulation already. The Monday low has taken already. So what is my bias now? What should be my bias now? My bias is bullish now. Why is my bias bullish? Because I saw the random reversal from here. See this random reversal from there? It should not be random from there. Still, I am bullish from my weekly analysis, so I'm believing that market is going to take that buy side liquidity. I wrote it down long before, even it happened long before I wrote it down that market is coming here. Whatever. You don't believe me? Just go and check my Twitter. Okay, so over here I'll be here. Okay. Now, right now, before 9:30, market is around that area. Market, where did it came? Where did it came exactly? 15-minute last fair gap. What is my bias now? I am bullish now. In short term, can I see any buy side liquidity? In short term, I can see this high has taken by that high. What is this called? What is this called? This is the part where I'm asking the question to you guys. What is this called? Whoever is with me for so long, you know what is this called. I need that answer. And I'm going step by step. So you will understand how to read this, okay? So you didn't tell about the right RTH gap, how to trade with that. No, you can't trade through the right RTH gap, okay? I explained that to my live lot of time, but I will do that again every single day. I explain the RTH gap, okay? But you are not going to frame your trade from there right now. Right now, it's not important. But yeah, I will tell that again tomorrow. Yeah, that's the shallow run. Thanks, brother. So that is the shallow run. What is that? That is my small buy side liquidity. Okay, I mean this is the extreme buy side liquidity. I know market is reaching over there because this random reversal can't be happen. So yeah, so it should over there. This is called shallow run. If it is a shallow run, this is called obvious liquidity. So there is three type of liquidity: obvious liquidity, normal liquidity, and the strongest liquidity. I don't have any example of the strongest liquidity, but just think, okay, this low and this low, they are relatively equal lows, very near to each other. Then this low, try to trade that on, and it stopped very near to that relatively equal lows. Okay, this low has to be very near to that low. That will be very like something like this type of high. See, it has to be very near to each other. Then another low will come very near to that sell side liquidity, then it will fail and it will go higher. Then it is called the sorry strongest liquidity. Now if you just give them a serial, this is obvious liquidity. The shallow run is called obvious liquidity. That means I don't care about anything else. I don't see any other liquidity except this liquidity. Market has to take that liquidity. After taking this liquidity, if there is a strongest liquidity, then market is going to take that strongest liquidity. Finally, after clearing everything, then you can go for the normal liquidity. This is called just normal liquidity. So in serial, this is the obvious liquidity, first priority. Second priority, the strongest liquidity. Third priority is just the liquidity. Here I have the shallow run, which is called obvious liquidity. That's my target. I'm just looking for buy. Okay. So from here, I have already got my fair value gap where price reached and it should go higher. Now I'll be in 1 minute chart now. I'm explaining everything one after another so that you can understand how to do this thing. Okay. I'm gonna mark that buy side liquidity and I will be here, okay, around that area. Okay. So this is 9:30 open. I mean 9:29. Sorry, that should be 9:30. Yeah, that's the 9:30 candle. What I'm looking for? Just a buy. What do I need for that buy? A market structure shift. It went lower. Take some liquidity. Absolutely. Did it went higher? Give me market structure shift? No. It went more lower. Am I going to afraid of that? No, I'm not going to afraid of that lower run. Why it's going lower? To take more liquidity. Just it's going lower to take more liquidity. Now when it reach to that new week opening gap, at the same time remember the sell side liquidity, it's cleared over there. I'm gonna remove these two lines from my chart because it reached to the new week opening gap, the strongest fair value gap. It's this new week opening gap is 1,000 times stronger than the last fair value gap. Okay, it came here. What should I look for now? Just a market structure shift. Did I get a market structure shift over there? No. It went lower a little bit, then it went higher. Market structure shift. Absolutely wrong. Why? When I already got a run, it didn't take the liquidity. So this is even it's not valid because there is no fair value gap. Okay, it's not valid. Then market went higher. Am I looking for buy? No. Why? Because market already left a long area. How do I know that it left a long area? You will just count sell side liquidity taken, the lower run. After market take the sell side liquidity, you will wait for the immediate reaction. Just an immediate reaction, immediate setup. Did you get it here? No, you didn't get it. What will you do? You will wait. So market went higher, it was just doing this. It went come back again. Where did it came back? New week opening gap. When it came back to that new week opening gap, did it went lower one more time? Yeah, went one more time. Did it take that liquidity, that low? Let's see if it take that on or not. Sorry. Can you see? Did it take that low? Absolutely, it has taken that low. If I get a market structure shift now, is it going to be valid? Absolutely, it's going to be valid. But brother, you are not looking for the 50-minute last fair value gap. I don't need it. Why? I am at the new week opening gap, the strongest fair value gap ever. If I got set up here around that area, I mean market has taken some liquidity below that low, then I got a market structure shift. Was that valid? Absolutely not. You have to go to your 15-minute chart. Was there any 15-minute fair value gap? Go to your 15-minute chart and look for the 15-minute fair value gap. If there is a 15-minute fair value gap, yeah, after taking some liquidity, then if it give you the market structure shift, that's the entry is valid. If there is no 15-minute fair value gap and it has taken some liquidity, give you the market structure shift, I give a shit of that. I don't care. If I miss that, I don't care. Is it valid? Absolutely, it is valid. Why? The strongest fair value gap. Then market went higher. Did I get any market structure shift around that area? Let's see. This high has been shifted over there. Is that displacement? What do you think? Is that displacement? Absolutely displacement. Is that swing high is valid for shifting market structure? Absolutely valid for shifting market structure. Swing high, swing high. See? Swing high, swing high. Valid market structure. Where is your fair value gap? I have this fair value gap. I have only one fair value gap. Brother, you always talk about two fair value gap. Then I have only one fair value gap. I don't care. This is just a 22 YT model. If there is a two fair value gap, that is called our well-known setup. But yeah, this is 22 YT model. Now, after shifting the market structure, I will wait for three candle. One, two, three. Did it trade that on? No. Am I going to take that entry? No. Why? No immediate reaction. Am I going to sacrifice that entry? Yeah, I'm going to do that. Okay, you sacrificed your entry. Now, when it went so far, I will go to 50-minute chart one more time. Okay, and after coming here, I will look for another 15-minute chart because I need another setup. So making that setup, I need another 15-minute fair value gap. So here I got a 15-minute fair value gap. I just marked it. I will go to 1-minute chart again. Okay, guys, I will read your comment. Whatever you are asking me, I will read that. But first, let me finish this morning session. Okay, so here around that area. So market went higher, it went lower, right? It has taken some liquidity. Look, I'm just going one by another. Okay, I'm just not telling you the hindsight. I'm just giving you the concept here. What did I say? Market has to take some liquidity. Did it take some liquidity? Absolutely, brother. So you are going to take a loss, right? Absolutely. It has taken some liquidity. What did I say? It has to reach to a 15-minute fair value gap. Did it reach to that 15-minute fair value gap? Absolutely. Very nice displacement above that swing high. Did I get that? Absolutely, you got that. Where is the first fair value gap? There is your first fair value gap, right? Here is your first fair value gap, and here is your breakaway gap. I'm showing you everything. Okay, just give me some time. What should you do? You should take your entry. Where is your stop loss? Just you will cover the breakaway gap little more. Okay, just little more. You will give little more space because we can go lower. Where should be your target? You can go for that entry fair value gap or the last fair value gap, depend on you. Okay, just I'll go to that last fair value gap. See this last fair value gap, I'll go for that. Ah man, you take a loss. Did I take a loss? Let's go. Okay, let's go. Did I take a loss? You mark that swing high as your market structure shift. Is it valid swing high to shifting market structure? Is it valid? My question is it valid to shift in market structure? No, brother, it's not valid. Why? Because this swing high didn't trade any fair value gap. It doesn't have a swing high on its left. It doesn't have a swing high on its right. No, I have a swing high on my right. Here I can see it, but I don't have a swing high on my left, which is lower than that swing high. So this whole setup, it's not valid. This whole setup is not valid. That means you didn't take any loss. No loss. Okay, let's see. Market went lower one more time. It has taken more liquidity. Tap to this 15-minute fair value gap, but brother, it broken the 15-minute fair value gap. Just fake breakout. Then it went higher one more time. Just one more time it went higher. Give me a market structure shift here. Here. Sorry, not there actually. Let me mark it here. It will be there. Fair value gap. You take very immediate reaction. Went higher. Boom. Right? Boom. Is it valid for shifting market structure? Just tell me, is it valid for shifting market structure that high? Trade any fair value gap? No. Do I have a swing high on my left? On my right? Yeah, on my right I have, but on my left, do I have any? Can you say it again? What did you ask? Look at the bodies of candles closed above last low. This is gold for reversal. Okay, that's your job. I mean, I'm not going that deeper. I'm just giving you the concept. Okay, I'm just giving you the concept. So this is how you will trade, brother. Okay, this swing high is not valid for shifting market structure. Absolutely not valid. So I'm gonna remove it. I'm gonna miss that trade. But brother, there is another swing high. Is it valid? No, it's not valid. It didn't trade any fair value gap. No rules met with that swing high as well. I'm newcomer, bro. What I want to do in order to understand this, which playlist I want watch. You please go to my channel and welcome to my channel, brother. And please study. I mean, watch the videos from study folder first. Okay, when you will done with the study, go to narrative. These two first you have to done, then I will tell you what you should go. Okay, I will tell that later. Okay, so this market structure shift is not valid, this entry is not valid. But brother, I got this market structure shift as well. Here, this structure shift also I got, and there is a fair value gap. Price trade that fair value gap and it went higher. I don't give a shit why. Market went higher, made a swing low, went higher again. Do you understand? It went higher, make a swing low, a reversal, went higher again. This is not your market structure shift. What you should look for here? Here, what should you look for? The same way you look for here. Higher, low, market structure shift. Went lower, went higher. What did you look for? Same thing. Market will take some liquidity. It has to reach to 50-minute fair value gap. Then it has to go higher. How long you will look for buy? How long you will look for buy? Until it hits your buy side liquidity. Remember, this is your shallow run. Until it's not taken, or if there is any fair value gap from 15-minute chart, last fair value gap. Let me go over there one more time. Actually, I need to check it. Yeah, I got it. So here, this is the last fair value gap. Below that liquidity. So here, this is the last fair value gap. So below that liquidity, this is the last. Until price hit to that last fair value gap, you will keep looking for buy. You will just keep looking for buy. You can't change your direction, brother. How you know that market is going for that direction? Why you are so confident? This is how I be so confident. This is how I am so much accurate with my direction. This is the way. I'm just giving you that, man. Just take it. Just take it, okay? So I'll be here in 15 minutes at one more time, and I will see in any kind of fair value gap around that area if anything I get from there. So you can see this is very sloppy price action over here. After trading this fair value gap, when market went higher, tap to this fair value gap, there is very sloppy price action. I will go to hourly chart. Okay, over here, where is it? Where was it? I think it was here. So from hourly chart, I don't have any fair value gap. From 15-minute chart, also I don't have any fair value gap from there. But in 1-minute chart, I will go to 1-minute chart, and I will come here. Where is it? Here. Okay, it's really so difficult if I just change one time frame. Okay, so over here, when market went lower, it went lower one more time. There is no 15-minute fair value gap, just nothing. I don't have anything over here. Is this market structure shift valid for taking that entry? See how beautifully it went higher, how precisely it went higher. Is that valid? Market has taken some liquidity, a very clean and absolutely perfect market structure shift, very immediate fair value gap reaction. I'm gonna take my buy over there, brother. I don't give a shit whatever you told us, whatever you said to us. I'm not giving you shit. I'm gonna take that until that last fair value gap. I'm gonna catch that 61 handle. My risk to reward ratio is going to be 1:4. I don't give a shit to you. Okay, if you don't give me a shit, it just worked today. It's not going to work every day. You will be regret. Trust me. This entry is not valid. Why? Look at the time. What time is it? 12 p.m. What is that? Lunch hour. Where the setup happened around the lunch hour. Are you going to take the lunch hour entry? Oh man, it's your job. If you want to take that one, you can go for that. I have no problem with that. Absolutely, I have no problem with that. Just go for that trade. I have no objection with that. I'm not interested. So around the morning session, what happened? Did I get any opportunity to take the entry? No, I didn't get. Should I take any entry? No, I should not take. London session, did I get any entry? No, in London session I didn't get. Around 7 a.m. I get one entry. Just 7 a.m. entry, nothing else. Maybe 20 handle, maybe 30 handle. I got an entry around the 7 a.m. Until now, I didn't get any entry. But brother, it worked perfectly. Why should not I take that entry? Because it went higher. Why should not take maybe this entry? It went higher. Why I should not take that entry? Because it went higher. You keep taking those entries. That's why you are not consistently profitable trader. You are afraid. You are just afraid because if I miss an opportunity or an entry from a session, I'm gonna lose everything. I'm just going to lose everything. That's why you are losing everything because you are afraid. Don't do that, man. If market give you a market structure shift here, maybe there was you got a very nice clean market structure shift. That entry was perfect. You go for that. If you take a loss, be happy with that because you went with the price action. See, that's why ICT told wait for the perfect setup. What is perfect setup? Everyone is going to show you the A plus setup. If I wanted, I could show you the A plus setup, brother. You need the A plus setup. If you keep taking the A plus setup, you will keep losing money. You need that? You need that. I could simply say you can take that entry. I could simply say this is the market structure shift because this is you see a very nice run. Very nice run. I can just avoid these two candles easily. I could say this is just a run. Very nice run. Just two candle is not going to make another leg, so it's just a run. And you can see price actually trade that maybe that last fair value gap from 1 minute chart or maybe that entry fair value gap. This is the your entry fair value gap over here, and there is your breakaway gap. There you go. Where should you take your entry? I don't give a shit about the immediate reaction. It is going to work. This is the A plus setup. Optimal trade entry. You will cover there and you are going to mark that shallow run. Okay, so by that A plus setup, you are going to get 1:8 risk to reward ratio and 117 handle. I give a shit, man. I know I'm not gonna be fan of yours, but this is trading. This is the missing gem. This is the missing part of your trading. That's why you are not profitable because you need entry. You don't wait for the setup. That is the thing, man. Okay, I'm newcomer. Okay, welcome. Learning I am. Thank you, GGZ. Thank you, bro. No problem. Markets only go up. Yeah, GGJ going up. There is the Twitter link to the comment. So if you want to add with me to my Twitter, you can add through that link. Trust me, you won't regret. Okay, you are going benefited by that if you just follow me to my Twitter. GG macros is different thing, brother. I have already done the macros thing. If you go to my channel, you will see the macro setup, everything over there, whatever. Professor PUBG, FOMO, yeah, FOMO, fear of missing and missing opportunity. Absolutely, brother. That's called FOMO. And what do you think of the order block entry after the fair value gap? Order block, nobody knows. You don't know what is order block. Catalano Hugo, I'm extremely sorry to say that, but not only you, I believe that nobody knows what is water block. ICT cleared that to his video. If you watch his 22 RT membership, and if you are with me for a long with my Twitter, I had already pinned that that video part where ICT told nobody knows what is water block. So yeah, you don't know what is water block, so you can't frame your trade depending on that water block. If you want to add more confluences over there to take an entry that is called forcing market to give you more setup. If you do that, you will never be profitable. Just one setup. The way I was explaining in Monday, maybe you take a loss. Until now, until the morning session of Tuesday, did you take any loss? No. Did you take any profit? Obviously, a huge profit from here, from that run, a huge profit, just a huge profit. Until now, you didn't take any loss. Just one trade, maybe two trade, maybe three trade, maximum three trade in a week, you will be able to make million of dollars. Trust me, man. I just made my all my profit, I mean all my losses, I just mitigated by Thursday morning. Not even in New York AM session. Before New York AM session, I made $6,000, near about $6,000 to my main account, $1,100 to my small account. I mitigated all of my losses with profit just by one session. I don't need that. whatever. You will understand, brother. If you just try to take more models, I'm gonna explain the easiest model so that you can get that model and you can trade the way I'm trying to trade, and the easiest way to trade this thing. Okay, this is the easiest way. In my opinion, this is the easiest way. So I will go for that. Now, if you want to go for another way, you can go. I have no objection with that. So whatever, I'm gonna mark the PM session now. Okay, where is the PM session start? So here, 1 p.m. the PM session is going to start. So here in the AM session, what a nice run, man! What a nice run! I just missed it. Okay, I just missed it. Ahmed Bedier, how are you, bro? Thanks you for all you do for us. You're most welcome. How can identify good MSS? PUBG, just go to my study folder over there to my YouTube channel. Okay, uh, just go over there and just watch two video. First video is what is market structure shift, that is the title, and the second video is how to avoid the losing trade. So you will go for those videos. You will never be able, I mean, you will never be wrong with shifting market structure. So you will be clear with that. Okay, you will be absolutely clear about that. So please watch those videos. So over here, I'm gonna mark, I mean, remove that buy side liquidity from my chart because it's already taken. I'm gonna remove it from my chart. I'm going to remove this level because I didn't get any reaction from there. I just need to remove it from here. Okay, now just before the PM session here. Okay, so 1 p.m. the PM session starts. What is your bias now? Are you bearish or are you bullish? You're most welcome. We have to trade humanly possible. Yeah, man, that's the thing, man. Well, I want one trade per day and done with it. Absolutely a strict trader. Now, when market has taken that obvious liquidity, what should I look for? The books are going to tell you after taking the buy side liquidity, you should look for the sell side liquidity. So it's time to take sell. No, man, it has taken the buy side liquidity, so I'm going for the optimal trade entry. I'm gonna mark from here to here. I'm going for 50% or 62 point, 62% or 76%. No, man, no, you are not going to do that. Optimal trade entry is obviously a good thing, but oh man, it's kind of disaster because in my opinion, most of the people doesn't know how to mark the rails. Okay, most of the people doesn't know. The huge famous person who actually taught you in YouTube in live. I saw they have a lot of fan and followers. Lot of, okay, they're very famous. I'm not gonna tell their name. I mean, 1,000 times better than me, and lot of subscribers, like more than 40-50,000 subscribers. They still show us the optimal trade entry, which is absolutely valueless. Because in my opinion, optimal trade entry is really so hard to mark. In hindsight, it's really easy. Sometimes it works, most of the times it doesn't work. So if you want to go with that, that's the best strategy. If you know how to use it, go for it, man. If you don't know, just skip that one. Okay, I'm showing you the easiest way where you don't need that optimal trade entry, that 50% equilibrium discount PDRA, nothing. You need nothing at all. So this is the PM session in Tuesday. I got the manipulation. Market came here. What's my expectation now? I know where market is going. Here to that fair value gap. Why? Random reaction. Below this, what do I have? This 15-minute last fair value gap. Below this last fair value gap, what do I have? This relatively equal highs. But market has taken the buy side liquidity already. I don't care. I have more buy side liquidity until price reach here. I'm bullish. I don't care about my weekly analysis, weekly buy side liquidity. I don't care about anything. I just saw that random reaction. I don't believe that random reaction can take the sell side liquidity. I just don't believe that. So until price reach over here, I'm bullish. I'm just bullish. So this is the PM session. Price reach here, just taken the buy side liquidity. What did I say? You will look for a fair value gap here. But brother, there is a lot of fair value gap. Which fair value gap I'm going to mark? What is that? What is this fair value gap? Entry fair value gap. What is this fair value gap? Last fair value gap. gonna mark both of them. Now, when market will tap that entry fair gap, you will start to look for buy. If you see market went lower, break the entry fair value gap and reach here to that last fair value gap, you will remove that entry fair value gap from my chart, from your chart. But when price will reach to that entry fair value gap, you will start to look for buy. That's all. Simple. Let's go to 1 minute chart. Why you are still bullish? I just explained that, I guess. If I missed it, just remind me. I'll explain that again. Okay. So this is the last line of today's session. After this, we are not able to take any kind of setup. Okay, anything over there. Now, this is the entry fair value gap. This is the first fair value gap or the entry fair value gap, and this is the 1 p.m. My session start. Market went higher. Do I care about that? No, I don't. I don't give a shit. Why? Because market is reversing from a random level. It has to reach to that fair value gap first. It came here. This is the first time market came inside this fair value gap. I mean exactly to that fair value gap, right? Absolutely right. Am I right or am I wrong? Just tell me. After coming here, market went higher. Give me the market structure shift here. There is my market structure shift. No, brother, that is relatively equal highs. Oh, brother, there is a small candle over here. Before this market structure shift, was there any other shifting market structure? Just market went higher. First, what market has done? It has taken all of this sell side liquidity. I'm giving you the clear idea about the market structure. It has taken the liquidity. This is the first time when market came to this entry fair value gap. After coming here, what it has done? Just make a swing high. It went lower. Is that swing high valid? Let make it clear first. Is it valid? You told us that there can't be a swing high which has the relatively equal highs. Is that the same high or it is just a swing high? Did this swing high traded that fair value gap? This swing high traded that fair value gap or not? Your job, find it out. Okay, just find it out. Okay, over here, in my opinion, that is valid swing high which has been shifted here. Now it went little higher, it went lower, then it shifted. Why it is valid? Come here now. This is the part, okay, of learning. First, I got a swing, I mean shift here. See, I got a shift when market came to the 15-minute last fair value gap. Oh, sorry, 15-minute fair value gap. I had a shift. Though it's not valid shift, but I had a shift. Then market went lower. It went higher. See, it went higher. Did I get any shift? No. Went lower, trade that fair value gap. See, this low has traded that fair value gap, then give me another shift. Just compare this whole price action with here. First time price came here, make a swing high. Was there any shift? No. Went lower, failed to take the low, give me the shift. When I got that low, did it trade any fair value gap? Was there any fair value gap? Anything? No. So it was a little shift. I mean, just two candle, but it's not a swing. This is not a swing. Compare over here. Sorry. This is a swing. This is a swing. Where was it? This is a swing. This swing has traded that fair value gap. Is it a swing which has traded any fair value gap or anything? So many confluences I have here. I didn't get any market structure shift yet. This is the first time I got the market structure shift with the displacement. And when I saw two black candle, it didn't give me any opportunity or it didn't make any fake thing. Over here, it has made the fake thing over here. This is the fake. Because after this market structure, this is for the newcomer who doesn't know which swing high I have to mark for shifting market structure. They will mark this as their market structure shift. They will be deceived. I mean, they will get deceived by that. They will take their entry from there because this is not valid. The way they will take the entry over here, they will think this is market structure shift. They will take the entry over there. This is the same setup to make fool us. This is not market structure shift. So when it give me an opportunity to take entry, then it went higher. That's why this market structure shift is not valid. Now over here, did I get any opportunity until now to take buy? No, that means market didn't make me full yet. But before making me full, it give me the setup. That's why I'm gonna believe this setup is going to work. Is that immediate reaction? Absolutely immediate reaction. Within 3 minutes, it has traded that fair value gap. I'm gonna take this entry. So over here, I'm gonna take that entry. My stop loss is going to cover that low, that candle low, or if you are over conservative, you can put it over here. It's up to you. I'm just put it over here. Okay, just for making it more clear. Now this is the part. Where is my target? This extreme buy side liquidity, is this going to be my target? Absolutely not. Then where I'm going to target? I'll look here, price action. I will go for the very nearest fair value gap or entry fair value gap or the last fair value gap from 1 minute chart below this buy side liquidity. Okay, so what do I see below this buy side liquidity? I will have this entry fair value gap which is not valid. First I will go over there. So here I have this last fair value gap below this small buy side liquidity. See this buy side liquidity over here. This is also a small buy side liquidity from 1 minute chart. Why I'm not going over here? Because this is liquidity is from 15 minute chart, the extreme buy side liquidity. Why I marked that fair value gap? Remember this fair value gap? Why I marked that below the liquidity, like over here? This is the extreme liquidity. Why I marked that last fair value gap? Because market can reverse from that last fair value gap. The same way, this is the extreme buy side liquidity from 15 minute chart. So either I will go for the 1 minute buy side liquidity. If I don't see any 1 minute buy side liquidity, something like that, I will go for the last fair value gap from 1 minute chart. Over here, that is the 1 minute last fair value gap. And sorry, and over here I will, this is that buy side liquidity, this is that 1 minute last fair value gap. Okay, so over here, that is that 1 minute last fair value gap. This two line is the 1 minute last fair value gap, and this is that buy side liquidity. Is that, no, this is the buy side liquidity actually. So over here, that is the buy side liquidity. I'm sorry, last fair value gap. Now it is very small, it is very small, you can say 11 handle. So in that type of situation, I will go for that rejection block. If I'm overzealous, I will never be overzealous, but if I'm overzealous, I will go for that high, at least that high. If I have the opportunity to take more than one contract, then I will take a partial around that area. I will keep the rest until here if I have more than one contract. But if I don't have that, I will either go for that high or that rejection block. It will depend. Okay, otherwise if I hold it until here, I will trail my stop loss too fast. You know how fast I trail my stop loss. So I'm gonna make it until that high, and I will see if it ever hit my target. Yeah, it though it takes too long, but finally it has traded and give me that, I mean, whatever you say. But if you ask me, I'll go for that rejection block. Still it's 25 handle. I'm really so happy with that 25 handle. I'm gonna remove that last fair value gap because it's too low. See, if I take my entry here, that will be my target. So I don't want to go until that small level. I will either go to that rejection block, or if I'm overzealous, I will go for that high. If I'm, sorry, if I'm overzealous, I'm the extreme level of jealous, then I will go over there and I will trail my stop loss if I take one contract only. So this is the way you will mark your buy sell liquid. Now brother, you are just showing us by after price. So after price, you are just showing us that where you will do that. Okay, just let go with you. So I marked my buy sell liquid over there, and when market went higher, maybe some level, I just put my stop loss over there, and finally I got stopped out to the break even. It didn't hit my stop loss, so I didn't, I'm not able to take that profit. Okay, just for your understanding, because some of you are really so keen to take that buy side liquidity, but though I didn't do that. Okay, so I let it go. Then market went higher, maybe I got stopped out to that area, market came here. Am I looking for buy from there? No. Why? Because market has already give me the run. I need to take some liquidity first. Did market take some liquidity here? Yeah, it has taken the liquidity. Did I give any market structure shift toward that buy side liquidity? No, I didn't get. So I'm not, I didn't get any buy opportunity. Why I'm looking for buy? Because market still didn't reach to that 15-minute random level area. Remember, market came here, just here. What is that? The same 15-minute entry fair value gap cleared all of this liquidity. After clearing all of this liquidity, market went lower, it went higher. Was there any market structure shift, brother? When market came here, again, went higher. Is this your market structure shift? This swing high has traded that fair value gap. Is this your market structure shift? Absolutely not. This is not a swing. Market just went lower. This is just up close candle. Just look at this leg. See this leg? In this leg, this is just an up close candle. This is not a swing. This is a swing. See this. This is just a swing. This is not swing. Try to understand. Market went lower, take the low, went higher. Now here is the part. Is this swing high valid? This swing high is valid or not? Absolutely valid. 100% valid swing high. Why? Look this swing. Market went lower, went higher, went lower again. See this swing? Can you mark the swing here? Just compare this swing and that swing. You will understand the differences. Try to understand the difference, brother. This high has traded that fair value gap. This small candle give me the market structure shift. But brother, this is not body close above that swing high. I don't need the body close. I just need a one tick above that swing high. I'm gonna mark the fair value gap. Is there any fair value gap or not? I'm gonna mark it. I got a fair value gap. Was there any immediate reaction? The very next candle traded that fair value gap. The very next candle. I'm gonna take my buy over here. My stop loss is going to cover that low. Maybe that low, or maybe I will go over here. Okay, at the extreme low, I'll just cover there. Now, where is going to be my target? Am I going to target over here, that buy sell, that buy sell? No, never. Where is my target? That last fair value gap. I have that last fair value gap from 1 minute chart. I can easily mark that fair value gap as my last fair value gap. But brother, you can go for that high maybe, or maybe some kind of high. Maybe go just mark and that high. Okay. It hit here actually, but yeah, I don't go over there. It is very near. So I'm gonna target over there. But brother, I would love to put my stop loss over there. You can do that. If I would take that entry, I did that thing. If I would take that entry, I would put my stop loss over there. For your kind information, I put it over there. 1:3 risk to reward ratio, same confluences, same thing over there. Now, brother, I really don't think this is a market structure shift. This is not volatility or the displacement. So it's displacement according to my. So I am not going with that. So mark that high, swing high over there, and wait for the displacement. Is there any displacement over there? Can you see it from here? No. So you are going to miss that entry as well. The way you should miss, you will just miss another opportunity to take buy. Are you going to take that sell? Never. Why? Because your bias is bullish. You know market is going higher. Where? That specific fair value gap. Because market reversed from a random area. That should be your target. So you know market is going over here. So you don't care about that lower run. When you will learn how to sacrifice this run, and you should see this run as a opposite run of your bias, you will learn this concept, man. You will start to earn money from here. Until then, it's gonna be very difficult for you. Now, the most important thing is your target profit, where you are going to hold your target, how far you are going to hold. Maybe you want to take your entry over there and you want to hold it until here. That's the problem. You can't do that. That is why I came with my last fair value gap concept, because you will always get a reaction from the last fair value gap. Always you will get that. That is why last fair value gap is important. So if you want to take a buy here, you just can't go to that buy side liquidity, because there is your last fair value gap. It has the power to stop the price. Look how beautifully it stopped at the price. But brother, it went above on one time. That is fake breakout. Just one time it went above when market was inside this here, okay, inside the session. Just one time it went above. That is called fake breakout. See the reaction from that last parallel gap. It was a stopping price to go above that one. Now later, if it go later or not, that is another day. I will explain another day maybe. But yeah, so yeah, in my opinion, I got my market structure shift over there. But if you think no, that's not my market structure shift, you don't have any chance to take entry over there. In overall, as a hindsight, can you see the sloppiness here? Isn't it clean sloppy price action from one mid chart? High, low, high, low, high, low. Market is just failing to break the level. It's just failing it. Finally, it able to take break that low and it tried to go higher. This is trading, man. Now there is uh, FOMC. I explained how it worked, and then I was actually when market tap over there, that was the fake run, first run. Then I was expecting market will go low, but instead of that, market went higher. You guys started to say that, brother, you were telling me that first move is the fake move, then the real move is coming. Everything I messed up with one concept only. I submit that I was wrong. This thing, okay, I was very lazy. So when I saw this type of contract change, that's why contract change made that last five lookup from 15 minute chart made me confused. I didn't mark that from my 15 minute chart. So until Thursday, I was thinking that until Thursday, okay, until Wednesday, I was thinking that was a random reversal, but actually it trade the 15 minute last parallel gap. If anyone is confused, you can go and watch that clearly. There is the 15 minute last parallel gap. I stayed that last parallel gap. If I saw that, or if I wasn't that much lazy, maybe it would be a much better week for me, because I took a loss in Monday, I took loss in Tuesday, in Wednesday I didn't trade, and actually I took an entry maybe, or I didn't, I don't remember. But in Thursday I mitigated all of my losses, and in Friday, sorry, in Friday, that's for your understand, okay, in Friday I have outlet, I was here and I showed you the same logic, the same way. One trade that was a water block entry, I got stopped out to the break even, no loss. Then I took the breaker block entry, it hit me, and finally this entry over here. Okay, the same logic, the same everything. That is all about from the Friday price action. That is the Friday. This was the Friday trade. Okay, so every single time I went with only two contracts, so two share. You can see one share, one share, one share, one share, two share. These two share I got stopped out. That's why to the break even, that's why it's showing two share. And every time it's showing one share, it's because I took partial here, here. One, two, three, four, four partial. Okay, one partial, two partial, three partial, four partial. So that was entry for two contract. You can see here, buy two, sell one, sell one. So partial. Then here, buy two, sell one, then got stopped out over here because that was my extreme target. I took partial to that last parallel gap the way I explained. Okay, I, you just don't think I do that for after hindsight, but I did it in my live trade. Okay, that was my first partial, and my target was that relatively equal highs. That was my target. I have uploaded the video to my Twitter as well. You can see when market tapped to that here. Look at here to that last parallel gap. I took my partial and then I trailed my stop loss above the propulsion block, and that was my last target. I was thinking that market will reach over there, but then market went lower and stopped me out over there. That was my entry according here. That was my entry. Market went lower. This swing high is valid for shifting market structure. When I got this market structure shift, just exactly over there, when I got that market structure shift, I took entry to that fair value gap. See over here, just to that fair value gap, my stop loss covered maybe until here. I don't remember actually, and then market went higher. So the way I explained every single thing, that was that trade. Over here, I took the breaker block entry. Here, I took the order block entry actually, but it didn't went very well. It actually stopped me out to the break even. So I tried to take order block entry, but every single time I took the buy. You can see even after seeing all of this price action, I took buy. After even coming here, I still took the buy. Still, I took buy here, not sell. I just give up every sell opportunity over there. I just took buy and I outlined this to my uh, Twitter and through my live streaming. I don't know if anyone is here who was with me in Friday. I mean yesterday, where I was actually talking about whole price action. I don't know if anybody is over there. I mean here or not. If anyone is here, you can confirm that I am not lying. Okay, I'm not lying. So to be honest, I thought that I will make this stream very small, but still after just explaining 2 days, it's already a long time. Okay, so I don't think so that I should go for Wednesday, Thursday, and yeah, but to be honest, brother, this is the way. Okay, what is actually differences? Let me clear one more time. When you are looking for buy, if you are looking for buy, you will let it go. You will let it go. Every single time market is going lower, you will look for buy. You will see this as a liquidity taken. You will wait for reach to a 15-minute fair value gap. Very nice market structure shift, fair value gap entry, take that buy. Every single time market is going lower. If you don't get it, don't take it. But don't chase this price. But you are going to miss the run, don't give a shit, man. This is the only thing that is missing from your trading, man. Just this thing is missing for your trading, from your trading. If you don't follow that, it's gonna be difficult, okay? Because yeah, that's all. Okay, thank you for the session. Have to go. We'll watch recording. It's penny. See you, brother. Gurus, thank you for this session. I'm glad I recommended that you do it on X because now I really understand what you have been doing for the last 2 months. I have been following you. Today you made it clear. Okay, bro. I really thank you, brother, because when I saw your comment, bro, I decided to come in live. Otherwise, I wouldn't come here. I had planned to watch a movie. To be honest, I was thinking to watch a movie, but when I saw your comment, I thought, okay, let's go and talk to the guys. Let's disturb them. Okay, yeah, that's why I came. Thanks, man. Yes, go for Wednesday and Thursday, and then do my ZB analysis. I'm here with you, brother, for the inter life, bro. If you forgive me, okay, tomorrow is a Sunday and my weekly analysis will be done within 30 to 40 minutes. Within 30 to 40 minutes I'll be done with my weekly analysis. Okay, to be honest, I didn't see anything yet. I will do that with you guys from the very beginning. How I start my day, I will do that from very beginning. Trust me, tomorrow at 9 a.m. New York local time. So after 30 to 40 minutes when I'll be done, if I do that JB analysis, is that okay, brother? To be honest, man, I'm really so tired right now. Thanks a lot, bro. No problem, Ahmed Pedir. Did I get any subscriber today? Bro, is it okay, brother? If I do that tomorrow, because still tomorrow we have market is closed actually tomorrow. So yeah, Rao like. Thank you, man. Okay, I got any subscription today? 4561. How much? How many did I have? I had maybe five, 5, 8 or 5. I don't remember actually. Tomorrow I will remind you. Okay, thank you, bro. Thanks for understanding, brother. Thank you so much. You're the best. No, Mike. What is that? Mick G. Okay, I'm sorry, but I'm not the best, brother. I'm just trying to explain the easy way, and I'm trying to make something clear, which no one is going to clear. Everyone is here to show you the setup. When market is going higher, they're going to show you the buy setup. When market is falling, they're going to show you sell setup, and they're going to place some ICT concept or they're going to place some ICT concept, maybe silver bullet, maybe they're going to put some uh, breaker block, optimal trade entry, mmxm, whatever they're going to put that over there. But it's not trading. You are not going to learn this thing like that way. You will never be profitable like that way. You have to sacrifice one way. If you are looking for buy, you have to sacrifice that. If you are looking for that, you have to sacrifice that buy run. Any of that you have to sacrifice. If you can make your mentality like that way, slowly but definitely you are going to be the winner. Very rarely you will take your losing trade. Now when I do live, sometimes I take lot of losses. Okay, you saw that last 2 to 3 weeks I took lot of losses. The reason is I didn't follow this thing. Whatever I taught you, this thing I didn't follow. Did I take that entry in my life? Just go to my YouTube channel, watch that that video. I took that entry. I so far remember here. Market structure shift, parabolic gap entry. Until that last parabolic gap, maybe that was my target. Or this relatively equal highs, I don't remember, but I took that entry. Just let me show you. Yeah, here. See this remember this that I outlined over there? This is that exactly that same entry over here. This one here is that thing. Exactly that entry. Tell me a guru's name who gives you all of this for free with this precision every day one after another. Okay, I was just kidding over there. Here, yesterday, to no, I hope market will reverse from any of these three level. Market reversed from 18506, exactly from that level, zero point 0.7, tick by tick. It has taken that my target is 18607. It reversed from there tick by tick, and then it has taken my buy sell liquidity or my level over here. Sorry. Yeah, that was my reversal tick by tick. Actually here tick by tick. Let me check. Let me show you. 506.75. See this 18506.75. 18506.75. Just look at the body. Why it is like that? 506.75. It wasn't here. Tick by tick here. It reversed from there. No body closed below that line. Not even a single body. Okay. And where was my target? My target was here. 18607.00. 18607.00. I marked that around 8 a.m. Newark local time, and it happened here. Okay, whatever, brother. But this is the thing, brother. Migdi, watch, study, then narrative. Okay, yeah, that's the thing. Migdi, can you remind us what are the most critical videos to watch in your library? Critical? I don't know. What is critical? What do you mean by critical, brother? Uh, if you just go to my channel, from my channel, go to my playlist. See this study. There is 16 video. Okay, just 16 video. Now, what I talked about the market structure shift. You have to watch this video first. What is market structure shift? How to avoid losing trade part 2. This video. You have to watch this video first. After that, you have to watch this video. See how to avoid losing trade. This video. These two video. If you watch these two video, trust me, you can avoid 1000 losing trade easily. You can easily tell me, brother, you are going to take that loss because you didn't follow the market structure shift rules. Just if you watch these two video, trust me, man, just these two video. Now here I have made some video which is important for me. You can watch them, it will help you. Then narrative. This is the narrative what I talked about here. Okay, let me show you. Monday accumulation, Tuesday manipulation, Wednesday expansion, Thursday continuation of the expansion, Friday reset. Okay, the same thing I just told, you will find that from that session. Accumulation, manipulation, expansion, continuation of the expansion, Friday reset. This thing you will learn from this narrative, just 5 days video. Then this is macro video, macro folder. This is fully independent. You don't need anything. And parallel gap concept, I have just started that. I mean that folder. There is only 11 video, but it's gonna be more video over there. This is daily recap. I just made 1 week, and I am really so lazy now, and I'm so tired now. Okay, so I didn't put any video over here, but I will explain the Friday price action. I will make a video tomorrow about the Friday price action, how to trade Friday. Make a short video, and I will put it maybe no, I won't do that over there. I will put it into that trade analysis. But that will be the latest video. So if you go to my video, or then you will get the latest video over there. Okay. Yeah. You are most welcome. Okay, so yeah, thank you guys for you had 4552. You got 9. You had 4552. I didn't understand. I didn't understand, brother Bro. What did you actually say? Mm, I guess you. I was looking for something. I don't know. I don't remember actually. Ah, and no, it was a Saturday, and actually I thought I will talk to you guys, but I come with the price action, and I spent whole my time with explaining the price. So my whole thinking has just vanished. Guys, how are you all? Everyone is cool? Everyone is okay? And what do you think about me? Am I helping you, or am I just wasting your time? I need your. Oh, okay. You had 4552 subscribers and you got 9 more. So now you have 456. No, I had more than 52 actually. I had so far I remember 4558 or 7. 4558 or 7. I don't remember exactly, but I had more than 4552 actually. Yeah. Oh, no, I had 456 one. I didn't get any subscriber today. I had that 6 one. I didn't get any subscriber. Yep, I didn't get any subscriber. I had that one. Even if I get any subscriber, someone actually unsubscribed me again. Okay. Okay. Helping, you are great. Thank you, man. Thank you, bro. Yeah, I tried my level best to give you something real. Okay, not kind of gurus type thing. I try to give you something real so that you can be profitable like other people, not like me. I'm not a good trader, but yeah, you will be maybe some kind of, there is a lot of legend. You will be able to post your winning trade, but still you will get the losing trade. Remember, at in the morning, I mean Monday, I took the first trade, a losing trade. Then I missed a trade. Finally, I got a winning trade. But if you follow the rules, the way I explained every single time, trust me, man, you will be the winner. At the end of the week, you will be the winner. And slowly, you will make, you will build the confidence to put more than one contract into the market later, okay, not now. You will be able to put one, two, three, four, five contracts on the market, because when you will be so confident that, okay, in 1 week, I'm going to get one losing trade, four winning trade. So why I'm not going to make it two contract instead of one contract? It's nothing, brother. Just follow the thing I explained. Just go with that. Now you can tell me why I'm not showing you breaker block, why I'm not showing you order block, why I'm not showing you optimal trade entry, inducement, then previous day high liquidity, previous day low liquidity. You are doing this. The reason is you are making complicated. You are making this thing complicated. Market maker sell model, market maker buy model, market maker that model, do those model. Did I show you any model except the setup? I mean the model setup. That means the buy setup. Market will take the liquidity, market structure shape, fair value gap entry. That's all. That's the model. Did I say you anything? Do you need to read whole the price? Nothing. Last fair value gap, first fair value gap. Price came here from 15-minute chart, came here, look for the setup, go for it. Done. This is so simple. You guys are making it more complicated, man. You are just making it more complicated. Now you are blaming that it's not working. It's not working because you are not ready to let it go. You are looking for buy. So you are not ready to let it go. You want to take that on. You also want to take that on. That's why it's not working for you. You have to make your mind. Either you have to take this one or you have to take that one. Slowly but definitely, you will be able to trade the lower run and the buyer run as well. If any of you has already watched every video from ICT 22 mentorship, you saw the first video ICT showed lot of entries, okay, where he took buy, sell, finally a sell. Then he told, I'm gonna explain the sell for you. I'm not going to explain whole my entries over there. Trust me, man. I'm also able to do that. I did it in Thursday. I did it, man. Let me show you. I did it. Let me show you, okay? Just a second, just a second, just a second. I take buy, I take sell, I take buy. Again, I got one loss. Lastly, I take buy again. Just I did it here. See, that was my profit. Sorry, I told you maybe 6,000. It was 5,000. Sorry, I'm sorry for that. That was mine. Just scalping. I just did scalping. I made that money from the morning session and the 7 a.m. closure. I made it. Then later I come with my small account. I took one entry just here. I just took that one entry from the AM session and I made $1,100. So I had a loss of $600. I made that 1,100. See this video? I wasn't looking for anything. I was just looking for a sell. That's all. When I get the chance, I took took that sell with my real money, not the paper money. Okay. Here, I took the sell. Market went lower. I take partial. I hold the rest over there. Boom. Just two contracts because that was my small account. To be honest, I'm done. So you will be able to do that. Trust me, man. You will be able to do that as well. Buy, sell, and I actually told what I have done actually. One loss, one break even, two hit target profit, one closed prematurely. So I actually took one loss, one break even, two entry hit my target profit, one I closed prematurely. That was my whole five entry. From that was whole five entry. You will be able to do that, but not now. Later, when you will understand everything, then now be be confident to let it go. That opposite and let it go, man. You are going to lose some entry. That's all. You are not going to lose everything, man. Just one run you are going to lose. I don't know how can I make it more understandable to you guys. And here there is a lot of people over here you will find who will show you how to take that buy, how to take that sell. If you want them, go and watch them. Okay, they will show you how to take all the buy and all the sell setup over here. They will show you how to take buy here, close there. They will show you turtle soup entry. They will show you turtle soup here, 22 IT model, market maker buy model, market maker sell model, uh, breaker block entry, order block entry, every single thing they will show you. Every single thing. Okay. And later when you will take a lot of losses, come back to me. No problem. The way ICT tell. Now you will leave me and later you will come back to me and you will tell me, teach me, brother, teach me how to do this. No. Oh man, I love his way, the way he told talk. You're great. I'm not great, brother. I'm just trying to show you the road. Okay, the way you should do. You're awesome, brother. Okay, I read your comment. Maybe no one help us much as you can. Thank you, Ahmed. That's a great compliment, brother. I really love your trading style, brother. It fits my psychology. Thanks for all that you do. You are most welcome. Inshallah, this will help me increase my profitability consistently. Consistency. Migdi, how far you are? I mean, how long you are with me, brother? Migdi, how long you are with me, brother? Hi, Tito. Just stopping by to say hello at work at the moment. So we'll watch the stream later. Thank you, brother. No problem, Shahid. So yeah, please don't miss today's stream. It's really so valuable. So please don't miss it. So Migdi, how long you are with me, brother? If anyone is new, you can subscribe to my channel. I got a subscriber. Congratulations to me. Thank you. This week, 4600 is my target. So I'm always right with my direction here. I'm always right. I am never wrong over here. And I'm always wrong here to my subscriptions direction. I am never right over here. By the way, thanks. Oh, MIGD 2 weeks. So yeah, brother, just stay some more days, then maybe you will get something. So Saj, hey, how you doing, sir? I came late today. Babysitting. You come tomorrow live at 9. Yeah, I will be there in 9. If everything is cool, then I will be there. Okay. If everything is okay, I will be here at 9 a.m. New York local time for the weekly analysis. So that's all for today, guys. And thanks for joining to my streaming. Thanks for subscribing to my streaming, to my channel, and thanks for love giving me love or like to my streams. I hope tomorrow at 9 a.m. New York local time, then I will explain the weekly analysis for the next week. And if you think this stream was helpful for you and you are new, you can subscribe to my channel. Okay. I previously watched Tanja, but you explained a little bit more detail. Okay, that's cool. Thank you, brother. Thank you. No problem, Ran. So see you guys. See you tomorrow. Until then, cheers. Bye bye.